All right, let me get ourselves onto the since I'm still live streaming technically on my computer. Give me a second here. Let's I'm gonna try to share the link with you guys. Apologies for all of this. For some reason I was having issues with the external mic, and then I guess I was having problems with, man, this computer's being slow. Maybe it's because I'm streaming on both. But yeah, I will try to, there we go. Try to get this over for you guys so that way I can switch onto what this stream is. There we go. And man, internet is being real slow today. Not having good luck here. I'm really trying my best to chat with you guys, and then this really really threw me through a loop here. All right. So hopefully we'll be able to get you guys over the course of a couple seconds here. But yeah, so apologies. I was just trying to do a quick plug for me and passive income investor. And no, it's not the internet at this point. It's me having a computer that's like 8 years old, and so yeah, that's my problem. I think maybe this Christmas I might treat myself to a newer computer that has ability to fix, not fix, but do video editing and stuff like that. So anyway, the video quality on the iPhone is better anyway, so we will use that instead. And just have a quick conversation with you guys, and hopefully, yeah, cheap computer for sure. See if you guys will move over to that, and then end this stream. People are still waiting for me to fix the here. So I'm waiting for people to switch over here. Yeah, I'm surprised you guys are bearing with me for this long. This is pretty crazy. Talk about a screw up. But yeah, hopefully you guys start crumbling out and switch at this point. So what was wrong is my computer, apologies. So my, I used to use this microphone here, and over the past couple, it's a Samsung Go mic. The quality of it, it's not bad when I first got it, but I don't know if it got damaged in transport or what, but when I moved down here, it just stopped working, and I don't know if it is the USB port of the actual laptop itself, or if it is the microphone, because my phone charges perfectly fine. It never has any issues. utilizing these sort of ports on the side of the computer. So it might just be that the quality of the microphone just isn't as good. So what I might do when I'm home and whatnot is fix it and grab myself another chat here. But let me get myself down to where I can see myself and have no volume going at the same time, so I can keep up with the live chat and everything like that. Apologies for the craziness that has ensued. I appreciate you guys sticking with me. But yeah, just wanted to, well, my sunset is basically over. It's sad, but you can kind of see it in the background. It looks pretty cool, but then you could probably see the reflection, but it's a pretty nice sunset. But yeah, I appreciate you guys really sticking with me over the time, but really just here to talk about you guys and what you guys have questions about over however long you guys want to talk about it for. So really curious. I know we're probably only going to get about 16 to 20 or so folks in here once we get some time going. Yes, your hearing is now back. Had nothing to do with me and my IT skills or anything like that. But let's talk about some investments. So for me, I've been trying to get my portfolio back to a decent amount of cash in the portfolio just because October was a very busy month for me. Bought a lot of positions and became very cash poor towards the end of the month of October. Then I went on my vacation and went to the US for a wedding and took some time off for a week and racked up a pretty decent credit card bill. So that made me realize that I need to stack up on a little bit of cash because I don't like to pay any interest on my credit card. So thankfully now I'm pretty even. I was able to pay off the majority of the credit card. And by majority, I mean all of it for this statement. And next statement's a little bit higher, but not too much higher than normal. This is Trinidadian filtered bottled water. I bought it because there was a storm coming up. I normally just drink it out of the tap, but there was a storm probably like a couple weeks ago, and now I'm just trying to, yeah, it's straight vodka. No, I'm just kidding. There was a storm a couple weeks ago, and I just didn't know how well the tap water would be, or if it's like in Houston sometimes when there's a really bad storm, they have to end up over chlorinating the crap out of the water, and so I just didn't want to have to go through that. So I bought some bottled water, and now I'm just trying to finish it as well. But it's very good. So yeah, really curious what you guys want to talk about at the moment. And of course, I have my Coco Bongo cup from shit, where is it? Excuse my language. Cancun, Mexico. So it was a good time. So the way I like to look at it is, people always ask, like, how's your portfolio so big? So the way I like to compare it is, I think a lot of people get turned off by the fact that I potentially have a very decent sized portfolio between 350 to 400,000. But the way you should really look at it is comparing it to what your income is. So if you're making, say, $50,000 a year in income, at this point, where my portfolio is, it's about 2.5 to 3 times how much I make in a year. So at this point, I'm 28. I've been able to invest enough where, even with returns and stuff like that, get to myself to a point where I have 2.5, 3x my salary, which is generally speaking a decent amount more than most people. A lot of people suggest and advise, but I'm not an advisor. So a lot of people suggest and advise that by the time you're 30, you should have about 1 times your salary saved up in case of any sort of emergencies or just investing or what have you. You can't hear me? Or you can? Is somebody just screwing with me? I'm an engineer. Okay, very good. So I'm an engineer, but now I'm trying to focus more on being part of the business side of things. So trying to get more into strategic planning and management. So that would kind of lead me away from being an engineer, but I'm an engineer by background. So that's really how I make a decent amount of my money. So that being said, I make in between $100,000 and $200,000 a year, but that's not really the important part. The important part is I'm able to save 40 to 50% of what I'm making, and if I wasn't able to do that, I would probably cut some of my expenses to be able to do that. And I think that that's just important that you recognize that while that's just a number, you can correlate this heavily to what your salary is. I mean, just think about that. I mean, yes, I'm making a decent salary, but I've also saved 2.5 to 3 times what my annual salary is. And so if you correlate that to your own portfolio, say you just make the average American salary of $50,000, do you have $100,000 to $150,000 saved at this point in, say, in your early 30s or not? And if you haven't, then you need to understand, are you spending too much? Are you not making enough? And I recognize that some of you guys have other obligations like children and things along those lines. But I think what people fail to do is they kind of come to these pages and they say, well, I kind of have, let's say, $1,000, $2,000 to invest. And they're like, where do I put it? And it's like, that's just the first step. I mean, that's literally the first and easiest step, is to really figure out where to put your first investment. And what you need to understand is it's a mindset change, and it's a journey that you need to begin. So yes, you might have that $1,000, $2,000 that you can invest, but where are you going to change your life in order to consistently add to that $1,000, $2,000 portfolio that you're trying to start? Because if you think about it, say you have $1,000, $2,000, and your end goal is to potentially get to $1 million. That's fine, that's understandable. And you say you have 25 years to get there. So that would mean that you need to basically increase the portfolio size by 500 to 1,000 times to be able to get to your goal, which is difficult with only having $1,000 to $2,000. But if you're able to save, even if it's just $100 a month, and get yourself to the fact where you'd be able to have, in 10 months' time, $3,000 in the portfolio, then you're instantly increasing the likelihood that you're going to be getting to that $1 million mark. And so it's not just a invest now, $1,000, $2,000 sort of deal. It is invest now and figure out a way where you can invest consistently over time, so that way you can help create a better chance of success for yourself. And I think that if you do that and not just think of I have $5,000 today, what do I do with it? You kind of become I have $5,000, I'll invest it throughout, dollar cost average throughout time, and then consistently add another $100 every single month. Then that is better, way better off. And you see that with everybody. I mean, you see Cherry do that, you see JMac Investing do that, you see me do that, you see Kyle, passive income investor, do that. It's not a one-sided equation. It's a forever equation that you need to kind of change in order to get to that point. So went off on a big tangent there, but hopefully that was helpful. So I'm gonna jump back up and try to get some of the questions answered. So Kyle, to answer your question, your portfolio size might not be nearly the size of mine, but is it comparable in terms of the amount of money you make? Because mine's 2.5 to 3 times my salary. Not saying that is where you need to be. What they say is you need to be 1 times your salary by the time you hit 30. I forget what the other ones are, but I think by 50 you need, I forget what by 50, I think it's like 5-6 times your salary. so that basically once you get to the point where you retire, you have 10 times your salary or so. So yeah, so if it's close, then you don't have a problem, man, and just keep steadily investing and you'll do great. So far the gig with Kyle is going really well. We just kind of kicked it off last week, so we have about 150 people have gone to the site so far. I really want to put some more time into writing blog posts, but yeah, that's kind of where we're at with respect to getting things going with Kyle. Where else we got? Systems engineer, that's awesome. Yeah, so it really all depends. I mean, if you want to be able to retire, you need to figure out a way. You're right. I mean, I don't plan on getting to the point where by 60, I only have, say, 10 times my salary, or maybe more. I mean, it all really depends on what your objectives are, and I think that you need to come to terms with your own self and figure out what you want to do. Is it retire early? Is it retire by the time you're 65? Is it get to the point where you can just supplement your retirement income, or maybe you want to work as a cashier for 2 or 3 shifts a week just so you can get out of the house? I mean, there's nothing wrong with that either. I think it's just understanding where potentially you want to be in your goals, and so not everyone's goals are going to be the same. So just recognize that. I think the biggest thing that people, the biggest problem that I see with a lot of people in their investing is they kind of enter half-heartedly and they don't put rigor into it, which is understandable. It's not an easy game by any means. It's not easy. And I think what people fail to do, and I talk about this all the time, is one, what's your objective? Are you trying to get to the point where you want to have passive income paying for your investments? Is it maybe you have an idea what your Social Security will bring, and you have a business that you want to keep and you don't want to get rid of? It really all depends on what you want to do. And then the other 4 things are, what's your time horizon? Do you have a year until you need this money? Do you have 20 years? Because your decisions, if you have 1 year or 20 years, is going to be extremely different. Your risk tolerance, if you see the portion of the portfolio go down 10%, are you going to sell, or are you going to buy into it? And a really good question by Kyle just came up on the screen. He said, if there's a recession, are you going to panic, or what was exactly, maybe I should get into some bonds? I don't really care about bonds. I mean, I'm comfortable with my investing objectives, and I have, a forever time horizon in that respect. I mean, to the point where I'm looking for passive income through dividend investment, and then on the side, I'm caring about price appreciation. And I believe that at the moment, bonds are so low in return, and the only upside is if we go to negative interest rates, that I would see, yes, it might be able to give me the passive income that I might need to live, but at the same time, the value of the principal would be completely destroyed and worthless. So anyway, I'm not very familiar with bonds, to be 100% honest. I just prefer owning companies with respect to shares, not debt obligation. And so that doesn't really interest me in that respect. So yeah, I can't really speak too much on it. But that also goes hand in hand with risk tolerance. If you're 1 to 2 years out and you need the money in 1 to 2 years, whether you're buying a house or whether you want to use it to buy a car, then maybe investing in the stock market right now, not necessarily for you. But for someone that is my age, 28 years old, and looking out for the next 20, 30 years, invest in the stock market now. The way I was kind of relating to it last week is, would you utilize the next, say, 5 to 10% of your investing career to dictate the other 90 to 95%. So the next 1 to 2 years might be have a lot of volatility, turmoil, but if you're investing for 20, 30 years from now, what does it mean for the next 1 to 2 years? In my opinion, it means I should keep buying, because in 20, 30 years is when I'm going to need the money. So that's kind of what I mean by number 2 with risk tolerance, is understanding where you are in your time horizon and how risky you want to be able to make that money. And then third, how much time do you want to put into your investments? Is it something where you just kind of want to set it and forget it? You don't want to think about it. Maybe you want to think about it once a year, twice a year. Maybe you love it as a hobby and you like looking at it every month and every day, or maybe 2 or 3 times a day. Maybe that's something that you should consider. And then maybe you are in retirement and maybe you do have a lot of time. Then maybe day trading is something for you. I wouldn't necessarily say that you should be turned off to day trading, but what I would recommend is, if you work a 9 to 5 job and you don't really plan on leaving that job at the moment, day trading is probably not something you should get into, because you might need 3-4 hours of direct concentration specifically into day trading before you are able to exit a position. And I've tried it before. I mean, so I work, I guess you could consider a traditional 9 to 5 job as an engineer. And I've been like, oh, I'm going to try to day trade this position. And I'd be there and I'm like, oh man, I have this 2 o'clock meeting. Like, what am I going to do? And you would either have to sell out of the position or hope that it goes for the best. And so just kind of think about that. And if you really don't kind of put those barriers in beforehand and think about it with a lot of forethought, then you end up in a negative position. And that's not something I want to see you guys happen to you guys. And then the fourth thing is understanding how often you want to contribute to the portfolio. And what I mean by that is, it kind of goes back to what I was saying a little bit earlier. If you're only going to put $1,000 to $2,000 in, and that's all you could ever put in, you don't make enough money, you're living paycheck to paycheck, you somehow were able to get this $1,000 to $2,000 by selling your car, and now you're going to ride a bicycle to work, and you want to get to the point where you're financially independent, you're going to have to be a lot more aggressive to meet your objection or your objectives than if somebody is investing, say, $1,000 a month or $500 a month. Because you think about it, if your goal is $1 million and that person has $1,000 to $2,000 and they're not going to be able to add any more capital to the portfolio, they're going to have to find some way to increase their portfolio by 500 to 1,000 times. Somebody that's able to invest, say, $1,000 a month is going to make it a lot easier to get to that $1 million mark. So that's really it about that aspect of things. So hopefully that finds you guys well, and that makes a lot of sense for you guys. If you want, there's a little bit, there's more information on that, and I'll post the link here for you guys. There's more information on one of my blog posts about this, if you guys want to go ahead and read that. So hopefully you're not able to see the notifications coming in on the phone. But yeah, if you guys are new to the channel, thank you for joining. Really excited that you guys have been here. 26 people is, I think, the largest that I've ever had in a live stream. So I really appreciate that. If you haven't already, hit that thumbs up button, and please write a comment in the live chat. I'd love to answer it for you guys. And speaking of that, I'm going to get right back into that right now. So hopefully, so Nick asked, what about SKT, and Simon Property Group after Carl Icahn? To be 100% honest with you, I've looked at SPG 2 or 3 years ago, excuse me, while I adjusted my chair, and the price to funds from operations was too high for me, and so I kind of walked away from it. And I think I put my money at that point into WP Carey, which is more triple net leases rather than shopping malls. And also the thing that scares me about SPG, trust me, I've been in a lot of Simon Property Group malls, and I love them. They're really beautiful. They do a really good job upkeeping them. But the thing that I'm still weary about, that kind of gives me uncertainty, as well as with all my real estate positions, by the way, is how Amazon is going to affect it. one of the things that I invest in is Stag Industrial, STAG. And with Stag, you're investing in B-class cities and warehouses. And so even if you are afraid that Amazon is going to take over, it might still have a play for you, because those are potentially occupied by Amazon or larger corporations for you guys anyway. So that's something for you to consider. And so yeah, I don't really have any information on you. I need to do more due diligence about that. So yeah, really curious what you guys think about SPG. I personally am. When's the last time I invested in a real estate investment trust? I mean, it's been some time, just based off the fact that they've really run up in price over the past couple months. So it's very difficult for me to want to invest in something that has a premium price to funds from operations. And that's the key thing to look at. I think a lot of people, I've talked about real estate investment trusts in the past with people in the office, and they're always like, why would you pay 40 times price to earnings? And it's like, I'm not, one, I don't like using price to earnings anyway, but two, because real estate investment trusts are able to depreciate a lot of assets, that allows them to offset their earnings, so they pay less in taxes. And so that being said, you need to look at the funds from operations, because that's actually what they're going to utilize to pay investors and make more acquisitions. So just keep that in mind. Utilize price from funds from operations, not price to earnings. So another last thing about real estate investment trust before I kind of move on, but hopefully you guys are able to fill me up with a hopper of questions that you might have, is with real estate investment trusts, I would just be wary. I know a lot of you guys are really intelligent, and you keep your real estate investment trusts investments and your partnership investments in tax advantaged accounts like Roth IRAs or potentially Roth 401ks if you have the ability to do that. But if you don't have your real estate investment trusts invested in something like a Roth IRA, just be aware that it is taxed at the highest tax bracket that you are in. So for instance, if you invest in something like Realty Income Corporation, and it has a dividend yield of about 4.5%, and you, let's say, are working very hard and have an income that year of, say, $150,000, and you're in the 32% tax bracket, your income off of Realty Income Corporation is actually going to be taxed at that 32% tax bracket, not the tax advantaged capital gains dividends tax of 20% or 15% in some cases. So just keep that in mind, because you might be initially attracted to that 4.5% yield, but because real estate investment trusts are tax advantaged corporations that pass on the majority of their taxes to the shareholders, you personally get taxed at a higher rate. So 4.5%, depending on your tax bracket, might be 4.5% if you're investing in a Roth IRA or something that's tax advantaged. But if you're investing in outside, that 4.5%, in the case of if you're making $500,000 a year to $1 million a year and you're in that top tax bracket, that 4.5% just got knocked down to 2.5% yield, just based off the fact that you're going to have to pay 40% or maybe even more in taxes, depending on if you're living in California, New York. Now, for those of you that are investing and you're in the lower tax brackets, that's maybe not something you need to worry about, because you're basically looking at either being taxed between 0, 15, 20%. So through 4.5% at say 20% may definitely outweigh something if you're looking at 3.5% and it's only taxing you at about 15%. So you'll still make out in that respect, but if you're in those higher tax brackets, just make sure you're keeping in mind. So we got about 32 people in here. I'd love to have great conversations, but I'm not very good about keeping the conversation going on my own, and I would love to have questions. So if you guys would pop that into the live chat on the right. 33 people, it's amazing. I've never had this many people on a live stream before. For some reason, I feel like I'm in a dream, because this doesn't make any sense. and I had so much issues with the audio earlier. So really crazy that we somehow managed to get 33 people in here. Really crazy. But with respect to the Bitcoin and the cryptocurrency, I have a lot of conversations with a coworker, Raul. I don't think you're on here, but if you are, what's going on, brother? He keeps telling me, man, I should be investing more in Bitcoin. But the thing is I can understand Bitcoin being something that is utilized, especially now that I kind of have more of an idea as to how Forex works and how difficult things are. But I just, for some reason, unless I was the one selling the shovels and the pans to be able to get the Bitcoin out, I don't see myself working. And I've been in that space before, and I made money on it selling the computers, but it just wasn't necessarily for me. One of the things that I might try in the future is if I have a little bit more time and I do get to the point where I am able to take a little bit of a step back in terms of how much I'm working and get another hour or two a day, then I would potentially look more at it in terms of a day trading thing. And I'm not ruling out day trading either. If I have the time in the future where I'm potentially traveling from country to country and financially independent, is something I've definitely kept in the back of my mind. But right now, really just trying to get myself to the point where I can get myself to the portfolio value that I'm really wanting to get to. And it's not necessarily a portfolio value rather than a portfolio income amount, which I'll talk to in a second. But really quick one, Fundrise or Cardone Capital, really depends, my friend. I mean, it really depends on what you're looking at. For Fundrise, they might have a portfolio of things that you're looking at, and you want to invest in something in LA, New York. Cardone Capital, they'll kind of say, hey, we're investing in these 4 properties. Are you in, you out? You very rarely will be able to get out of your investment in Cardone Capital. One pays quarterly, one pays monthly. So I've only been able to get 4 payments out of Cardone Capital to date, and I've been invested in Fundrise now since June of 2017. So I have about 1.5 years more experience, maybe almost 2 years more experience with Fundrise. But the thing I dislike about Fundrise still to this date was they always claim to give you more than 8% returns, and I've seen sub 8%. And actually, when I first started, they were claiming anywhere between 10 to 12%, and they still sometimes claim that on the website. And I still have yet to see one of my investments, even if it's not ramping up or anything like that, to get to that point. And so that frustrates me, the fact that they're trying to say they'll get 10 to 12%. And but if you want to be more liquid, I wouldn't invest money in either of those, because I have had friends and coworkers that have pulled money out of Fundrise, and it took 90 days. I don't know how long it would take if I really kicked and screamed to get money out of Cardone Capital. I don't even know if you could. I invested in both of those because I knew I wasn't really going to take any of those out. So any of those investments out. So maybe with the Cardone Capital one, I might take it out if they sell the fund and they're asking me to reinvest in a separate fund. Maybe I would do that, but for the time being, probably not gonna get those money out. So jumping down to the next question, how much money am I aiming to have in the portfolio? $1 million. So the question being, am I aiming for $1 million? The answer is, if I can, I would have, and this might seem off, but you'll understand what I mean, hopefully with a little bit of an explanation. If I could have a $500,000 portfolio and be able to make 10% returns, that would be fine with me. And not 10% returns, but 10% dividends coming into the portfolio every single month. And the reason why I'm saying that is because while a lot of folks, and this is for me personally, it might be different for other folks, and so it goes back to what's your investing objective, and how do you want to get paid your money? Is it something? So the way I look at it is, I pay my bills on a monthly basis. So I want to make sure that the money that's coming in and the investments that I make pay me on a monthly basis, so that I'm able to utilize that money to pay my bills. And so I'm a personal believer that cash flow coming in and out of my accounts is what matters, not the total value of the accounts themselves. And so if I'm able to have, say, $1 million portfolio that's throwing off $50,000 a year in dividend income that I can then use to pay my bills month after month, I would rather that than something that, maybe if somebody gave me a $2 million portfolio today and it didn't have any dividend stocks in it, I would probably sell all that stock and put it $2 million into the dividend stock, just because it's something that I can then utilize to put into real estate or a business or whatever I feel like. So it's not necessarily the dollar amount for me, it's the income amount for me, because income is how I'm going to pay my bills. So that's that being kind of about calculated. I need anywhere between $40,000 to $50,000 a year, and that's living pretty generously. It's not, bootstrapping or coupon cutting or anything like that. That was how much I was paying when I still had a car payment and insurance and, a really nice, fancy downtown apartment. Not really nice, but it was a nice downtown apartment. And so that needed, $4,000 to $5,000 a month. So if I'm able to make $50,000, $60,000 a year in dividend income, that means that I could easily take my time elsewhere if I wanted to. I don't plan on retiring, quote unquote, at $50,000, $60,000 a year, but it would be a relaxation of financial stress, and I'll be able to think clearer, in my opinion. And so if I were to back calculate off of that, and generally speaking, I want to have the portfolio yielding about 3.5% to 4%, because that's where I'm comfortable. Remember, I go back to that risk tolerance aspect of things. The risk tolerance of the companies that yield 3.5% to 4%, the companies that come in mind, companies like 3M, Johnson & Johnson, Realty Income Corp. If you kind of choose some of them might be 5%, AT&T might be 5.5%, 6%, and then Johnson & Johnson might be 2.5%. They all kind of yield out, and then you'll end up getting something that yields 3.5% to 4% as a total portfolio. Then in that respect, that is what I'm more concerned about. And that would get me to a portfolio size of anywhere between 1.2 to 1.5 million. And at the moment, portfolio yields about $11,000. And some of that is actually, some of the portfolio, so $300-some thousand portfolio, a third of that is in a Roth 401k that I don't get any income from. And so part of me is just like, well, I could easily increase the income coming from the portfolio by about 50% if I were to just cash that out and invest it in dividend paying stocks. That $11,000 would go to $16,000, $17,000 overnight. And, that would be able to get me an additional $500 a month. So I'd immediately go to about $1,400 a month in dividend income, up from about $930 or so a month in dividend income. So there's that. So somebody is asking, they're only comfortable making their 403b investments at this time. Are they behind the 8 ball if they're not actively investing and relying on a financial advisor? That's really up to you. I mean, if you've been listening from the beginning and you're comfortable with your risk tolerance, you have an idea as to what your total dollar amount is in mind, and what your objective is with the portfolio, then that's a question you need to answer yourself. I can't answer that for you. And I think a lot of people are like, I need someone to answer this for me. And it's just like, well, everyone has their own special situation, and, you don't necessarily need a financial advisor. I go at this alone, and I think I'm doing perfectly okay with it. Am I maybe making some mistakes? Some people might say so. I mean, some people might be like, well, you're investing too heavily into single individual stocks. I'd invest more in ETFs, but ETFs, generally speaking, the ones that people would want me to invest in are the S&P 500, and that's not a big problem at all. I'm a big believer in people that if they want a passive investment, to just invest in the S&P 500 and kind of let it go. But I'm more of a dividend investor, so I like to see the money coming in and selectively reinvesting it month after month. So that's me. But yeah, it also depends. I mean, with your job, are you getting a potential pension? Are you getting other sort of benefits that would last throughout life? Are you, I mean, that's one thing I don't even talk about, but I actually get a pension as well with my job as an engineer. It's one of the very few companies now that still offer one. And so I don't even consider that, but if I wanted to, I could. They actually have a calculator on Fidelity that kind of gives me an idea as to how much money I could be making in the future through this pension. And I could take that into account and just say, I'm done, I'm walking away, and utilize that to change my trajectories. But I'd rather be more conservative, and also who knows how long that pension might be around. There's companies that get rid of pensions all the time. GE just did the same. And was it IBM that also did the same? I don't even know. But GE just did the same. I mean, they just got, axed a lot of people's pensions. So, and I've heard Verizon doing the same in the past as well. So you can't really rely on something like that. So just consider that aspect of things. Are you behind the eight ball? Who knows? I mean, it really all depends on where you are. I would do some quick looks to see at your age group how much you should have saved. And then also, I mean, if you're married or not, that also plays a key part in it as well. How much do they have saved? So that's that. My buddy Kyle joined. I saw him a little bit earlier, but I was mid sentence. So what's up, brother? Hope everything's going extremely well on your end. Yeah, man, 32 strong at the moment, but I saw us get up to 36 at one point. That's pretty crazy. What has been your contributions throughout the years, 2012 to today, and what was your down payment for your first investments? Dude, down payment for my first investment, so I can't tell you how much I've invested throughout the years because I've bought and sold so many different things throughout time that I don't know. But the answer is I invest every single month. And I think that that's more important to understand than what's the total return of the portfolio, because I don't care about a total return of the portfolio. A lot of people ask me about that. They care about what the total number of the portfolio is. I do that for you guys. I do that because that's what attracts people to the channel. I don't care. I care about the $930 a month that's coming in every month. And a lot of people might be like, why is that, what does that matter? It's because if somebody handed me $2 million, I already said this, somebody handed me $2 million, they'd be like, well, how much is it paying me every single month? Because if I want to go buy a house, if I want to go buy a car, those are all going to require monthly payments. And so I'm going to stagger all that $2 million so that I'm getting, probably close to $5,000-$6,000 coming in every single month. I mean, that's just what I would want to do with it. $2 million at 4%, I mean, that's $80,000. So, you'd be looking at close to, I don't know, what is that? $8,000 a month. Am I doing that wrong? $7,000 a month. So yeah, I mean, I'd be doing it that way. That's what I would do. So, but to answer your question, I don't know. I wouldn't be surprised if I've contributed half and half of it's increased. But to be honest, I don't know. Maybe it's 3/4 of the portfolio. Maybe it's over 250,000 that I've contributed. I'm not entirely too sure. But my first investments, I was telling somebody today that I was scared, pardon my French, but shitless. The first couple times that I would buy, I remember I had a $500 investment in Sirius XM, and I was scared crapless. Every time I'd see it go up 2%, down 2%, up 2%, down 2%. And that was when I wasn't really doing dividend investing at the time. That really was scary to me, was seeing it go up and down. And then I realized, over time, it's not only just that, but you kind of enter new levels of the portfolio. So it got to the point where I was investing outside of my 401k. That $500 was a lot. And then I would get to the point where $1,000 wasn't a big deal. Now I'm getting to the point where, $5,000, I mean, it still, impacts me that it's $5,000, but it's, you're able to buy and sell positions now that are thousands upon thousands of dollars, but it wasn't always like that. I mean, it continued with saving my first $100, then it was my first $200, and then I was like, well, now I'm going to invest $500 a month, and then it went to $1,000 a month, and then last year it went to $1,500 a month that I'm going to contribute to my individual brokerage account. And so, it really all depends on what you're able to contribute. I mean, that to me is, let's just say 15-20% of my income, and then I contribute to the 401k. I invest $500 a month. If you were to average that out in a Roth IRA, although I do it lump sum in the beginning of the year. So you think about it, that $1,500 a month is what I automatically get taken out of my checking account on the 15th every single month. $1,500 on the 15th every month, plus the $500 in a Roth IRA that gets you to $2,000, plus 7% of my salary. So that's another decent chunk every single month that's going in there. And I think that you just start to understand I'm utilizing a pay myself first mindset. I'm not necessarily caring about bills, because those are taken care of at this point, with respect to I'm making enough money where I have on auto investment basically $1,500 coming out of the paycheck, 7% here, 5% here coming out every single month. And it really doesn't hit home. And then every couple months I'll look at the checking account and be like, okay, and another thing is, I have a personal savings account through Amex that gets, is it $500 a paycheck? So twice a month I'm putting away $1,000 into a personal savings account. So it's like, that's another 10% that's going away to savings. So it's like, at that point you start adding everything up and it's 45-50% of what I'm saving. It's like, you need to understand, if you're willing to pay the government, and this is a Grant Cardone sort of thing, so some of you guys might get turned off, but if you're willing to give the government 30-40% of your income, you're not willing to pay yourself 30-40%. I mean, that doesn't make any sense. You're willing to just allow them to take a third to up to 50% of what you make if you're living in the state of California or New York, where you have to pay state income taxes, and you're not willing to pay yourself even half that, 20%, 25%. I mean, it just doesn't make sense. Your priorities are skewed. And so you need to understand cost-benefit analysis. Does that car actually make you as happy as you think it does? And if the answer is no, then you need to come to the sad reality that you could drive a car that's half as nice and get to where you're going, point A to point B, and then utilize that money to invest. And if it saves you $500 a month, $500 a month, if you invest that at say 4%, that's going to be $20 extra every single year that comes into your pocket through dividends. Not including dividend growth, whether it's 6%, 8%. And so you basically just need to get yourself to the point where you build your portfolio, you're chipping it off every single month, and that's that. So yeah, I started off at $100 every single month. And that was a lot to me, and I was scared crapless every time it would go up and go down. And now it's to the point where I've been able to contribute and get myself in a position where my investments now are actually investing more than when I first started. So I reinvest every single dividend that I get. So I'm investing now $930 every single month on average. Some months it's $1,200. Some months, like this month, it was $788. But that's $788 is $688 more than what I first started investing. So I mean, like I said, it started at $100 a month, maybe less. I don't even think I had it on auto invest. So it just starts to think that it's not necessarily about the total dollar amount, but how much you're putting away. Is it 5%? If it's 5%, man, you're going to be working for the rest of your life. I mean, I'm going to be honest with you. If you're saving up to 40%, you're going to be working for 10, 15 years, and you could call call it quits. You make the right investments, you might be able to cut it down by half and be out and financially independent in less than 10 years. It's all a percentage game, and it really just depends on, are you disciplined, and are you willing to delay gratification, or do you want to be a worker and work for 40 years? And that's okay. That if you say, I'd rather live my life now, I want to be happy, that's perfectly fine. If you just want to save your 15 to 20%, do a typical retirement, I'm not advising against that. I'm just saying, for myself, I utilize investing as a game, as a business for myself. I like the business mindset. I like thinking of myself as a business. I like, living myself as a business. Invest here, invest there. That's fun for me. For some people, they have other priorities, and I understand that. They have family, they have kids. Those are their priorities, and that is nothing against them. I might be the same way when I get to that point, but at the moment, this is the way I want to live. I want to live like my life is a business. So Nick just asked, he just turned 20, and the fact that he's even asking about saving is phenomenal. I think these kids nowadays, man, they're absurd with respect to saving as early as they can. I started when I was 22, and people thought I was a psychopath. So the fact that you're 20, man, and hopefully you're still on here, I'm just impressed at the fact that you're even asking the question. I had a coworker who just started. She's 25, and hopefully she's on here. Maybe she's not. If you are, what's going on? You know who you are. I was just like so blown away. She's 25, so she's like 3 years younger than me. She's like, I need to get started. I read your blog post, really good work. I'm just curious where I start from now. So what you're probably going to see, Nick, is people are going to be like, don't invest now, but you're 20, right? So I don't know when you joined the discussion. And if I skipped any of your questions before Nick's, which is I think 4 or 5 questions back, just keep rolling, and I'm gonna continue to continue the conversation. And I want to cut off before 10 because I think Lydia and Independent Investor are starting. So if they're starting, let me know, because I really want to see that, and they're really good guys and really great people in the community. So just remind me. I think it's 10 o'clock. I hope it is. And if it is, just let me know. I really want to catch that, and those guys are really good community friends of mine. So just let me know, because I'll be on this thing for. I'm 52 minutes in, and I feel like I could go for 4 more hours. I'm energized. These guys are asking good questions. So Nick, back to your question, is you just turned 20. Don't let the next 2 years dictate the next 30, 40 years of your investing career. If you want to utilize this and you want to have this be a long-term investing sort of journey, don't let 2.5% to 5% of your potential investing journey dictate the other 95%. You're 20. I started when I was 22. I'm lucky that I've been involved in a particularly bull market, but I remember in 2015, when I was still just getting involved in dividend investing, I was scared. I was like, man, 2015, it was an uncertain time. I remember February 2016, Boeing, this is actually a funny story, Boeing hit $110. It was up to like 160 at that point, and it dropped down to 110. I was like, oh my God. I was like, do I buy? Do I not buy? I wish I had bought. I didn't have enough money at the time. But if I did, that was the next purchase I was going to buy, and that would be up crazy amounts. But if you believe that the economy is going to do well, look at what happened in 2008, 2009. People always quote 2008, 2009. I think the market was at 1,700, 1,800. We're at 3,000. 10 years ago, people would be like, oh my God. And people just got involved in the market. I would say it's exploded massively. After crypto probably popped in 2018 timeframe, people, I think, started entering into the market and being like, oh my God, the party's almost already over. You're showing up to the bar at 1:30 and it closes at 2 a.m. I'm not trying to like upset people, but had they been investing since 2008, 2009, their money would have exploded. The market was down to below 1,000. They would have doubled, tripled their money at this point. And had they thought about that and been like, you have some people that were probably in their 30s back then being like, oh, I don't want to see what happened to my 50-year-olds. It really all just depends on what's your time horizon. Are you here and, are you 60 years old and you need that money in 2 years because you want to retire at 62? Pull some money off the table. I'm not going to hold you back, and I'm not going to, upset you. But for someone like yourself, Nick, that's 20 years old, just in the beginning of their investing career, I would just say, and maybe if you want to wait a little bit, that's fine. You want a dollar cost average in, that's fine too. My buddy Kyle, passive income investor, might say dollar cost average in month after month. If you have, say, 20 grand and you want to put in $1,000 every month, get your feet wet, understand what you want to do. But I would first ask myself 5 questions. What am I investing for? What's my time horizon? What's my risk tolerance? Do I want to look at this every day? Am I going to try to get this, say, $20,000, let's say, to grow to $100,000 in a year? Then, you have to be realistic with what you want to do. And you also have to understand how often you're going to be adding to the portfolio. If you have a steady job and you want to, to be 100% honest with you, if you're 20 years old and you're going into college and let's say you have a light course load, maybe day trading is something for you. I'm not trying to sway you into that, but if you have a couple hours a day and you really is something that you really want to get involved in, maybe that is something for you. If you want to focus on your studies more, maybe passive income investing is something more into your style. Dividend investing is maybe into your style. Maybe swing trading, if you have the ability to look at, say, 2 o'clock, 3 o'clock every single day, understand how the markets are moving, see that there's a macroeconomic sell-off, 20, 30% in one sector that's currently out of favor. I say that I combine myself as a swing trader with dividend investing. I'm not going to invest in stocks that are overvalued, but if I see a trend in a stock that's looking really well, I'm going to buy it at a very low price. Caterpillar is a really good example. Earlier, about a month and a half ago, it was down to $110, and I bought it at $119, and now it's up, 25% or so since then. So it's really about, weighing and being conscious of what you want to do in the market. And I feel like if you have a 9-to-5 job and this isn't a hobby of yours, it might not necessarily be something that you can do, which is swing trading. You might just want to put it in ETFs. It really all depends on how active you want to invest. And to be 100% honest with you, I'm just gonna put this in the chat here. It's talking a lot about what we've been talking about tonight, which is understanding 5 or so tips of before you really start investing. So hopefully that's a good read for you. I'd love your feedback. If you could reach out to me and let me know on Instagram or anything like that, what you think. If there's anything that you would tailor, I would love to hear it. But I think that's the best thing and the best way I could describe how I would start investing and how I would get myself in a firm standpoint if I were to restart. So I wish that somebody had given me something like that, sat me down, because it probably would have saved 2-3 years, and I probably lost out on a couple tens of thousands of dollars just by churning, trying to go to penny stocks, trying to go to, cryptocurrency as well. That was, I stopped investing my time into YouTube because of cryptocurrency. I stopped investing in the stock market because I was concentrating on that. I didn't lose money from cryptocurrency, but a lot of time was spent, chasing that. And had I realized what my goals were, I maybe would have made a different decision and focused a little bit more of my time into continuing sticking with dividend paying stocks. So really long answer for you there, Nick, but hopefully there's a lot of insight in there. But Kevin does a really good job as well. Keeping a decent amount of savings is also really key. So just keep in mind there. So Boeing and Altria Group. I'm a firm believer in Altria Group is going to be doing extremely well. Personally, for me, it's a cash flow monster. Just looking for price to free cash flow. That thing's spitting out money, and the amount that they're paying out in dividends is massively well covered in terms of what they're providing. So to dividends to investors. So I think some people are scared just because the stock price is going down. But if you look at the fundamentals, yeah, they got a little bit of debt, but they could pay that off if they really wanted to, and that's important to me. And so I'm a huge investor in Philip Morris. Let me pull it up. Actually, I can't show it to you guys because obviously I'm on my phone now, but I could at least quote you guys some numbers, and there's some videos as well. Maybe one of these times, if this gets enough viewership and enough thumbs up and the channel grows up a little bit more with respect to subscribership, I'll share what my current portfolio I'm investing in absolutely everything. Last time I did a quick update, it was specifically just looking at the top few things in each individual portion of the portfolio, so I didn't reveal absolutely everything. And of course, there's some dogs in this portfolio. I'm not going to lie to you. One of my positions, Seadrill Partners, is down over 95%. But that's just one of those things where sometimes you win a good bit, and sometimes, unfortunately, you make the wrong decision, and it is what it is. So what else have I invested in besides stocks? So I invest a lot into private real estate. I have Fundrise, I have Cardone Capital as things that are paying me. So at the moment, I'm making about $80 a year from Fundrise, investing $138 every single month into that. And then Cardone Capital pays me about $56, $57 every single month as well. And so there's that. So Kyle, to answer your question, I started investing about 2012. But really only started getting massively into dividend growth investing in probably late 2014, 2015 timeframe. So this has kind of been my current train of thought for the past 4 or 5 years at this point. And this has been the best success that I've had. And I also really like the income aspect of things. So what stocks am I buying at this time? I haven't bought anything in a couple weeks now because I'm trying to get my position in cash up. But the last thing I probably bought was Caterpillar. I guess that's also a lie. I have M1 Finance. There's a little bit of money that goes into that every month as well. That purchased some Visa. So that's exciting. But yeah, I just have I have $2,000 or $3,000 sitting in my brokerage account that's just sitting there collecting dust. I'm really trying to get some things out before I went on a vacation next week. So I'll be back stateside tomorrow, flying to New York, get there about tomorrow afternoonish time frame. So yeah, hoping next week I get a little bit of time to evaluate what I might be buying next. But trying to get the cash position up at the moment. So there's that. When dividends pay out, the price of the stock lowers, very similar to actually selling a portion of the portfolio. The value does go down. For a day, it goes down. But I mean, there's sometimes when, Alex, that they pay it out, and yes, it might open at a lower price. If, say, the dividend pays out, say, 40 cents, it goes down. But by the end of the day, it might have already climbed back up 1 or 2% and already offset that loss. So don't think short-sighted. It might go down for a fraction of the opening trading day, but overall it works out. So hopefully this bad boy's still charging. I just got the 20% warning rule on my phone, so hopefully everything's going well here. But let's see. Am I taking profit at certain points, or am I buying and holding everything? So generally speaking, thanks for the question. Generally speaking, sorry, my right nostril is itching me. Generally speaking, it really depends on the position. If it's something that I don't have a lot of faith in, or I've fallen out of favor with, and a really good example of that is Hershey a couple, maybe 2 years ago. Really liked Hershey, was really a fond favor of it. I grew up in Pennsylvania, so the Hershey company is based about an hour or so, maybe an hour and a half away from where I grew up. And so I'd been there to the amusement parks, and of course the grocery stores are filled with Hershey's chocolate. It's a market share leader in raw chocolate bars in the United States. Really great company. And then I started recognizing that the management was somewhat corrupt. Really liked the product. Obviously, I eat I enjoy my Hershey's chocolate with almonds, but the management, 80% or something like that of the stock is owned by the Hershey Foundation, which is also really corrupt as well. So even though there's a board of Hershey's, they actually have 80% of the ownership owning the company, which has its own board, and which is a very corrupt organization. I don't know if it still is, but 2 years ago I was reading and wasn't having it, and I didn't want to be involved in a company like that management-wise. Poor position at that standpoint. Obviously, if I'd held on to the stock, it would have gone up for me, and I would have actually made a decent amount of money. But that being said, I'd rather not make money off a corrupt organization, in my opinion. So that's that. So for those of you guys new to the channel, I've never had 32 people, and actually had up to 40 some people in here at this point, at some point, which is crazy. Really appreciate it. If you are new to the channel, make sure to subscribe and try to check out some of the other videos that I generally talk about. I don't generally do live streams. I have been getting more prone to doing them, but I talk a lot about the portfolio that I have under management and how I personally view the financial world, which is very different from I think what a lot of people are. But there's a lot of new people in here that I've never seen. Of course, I got the people like Investing with AA, Ron, Kevin, Gen X. I mean, they're all in here. All Good was in here earlier. A lot of folks asking really good questions. Passive Income Investor was in here as well. Just for a quick bit, I haven't seen him chiming in. He's probably doing some work while he's listening. But some of you guys like Alex Nunez, I've never seen you before, and a couple of you other guys that have been asking good questions. So either you guys don't really chat or chime in within the comments section, or you're new. So feel free to hopefully continue to watch some of the videos, and released a recent video that I'm making about $30 a day, if you were to think about it that way, in terms of dividend income, which is awesome. $30 a day. I mean, think about it. Think about what you could do with $30 a day. Pay for your family's dinner every single night. I mean, that's just the sort of stuff that we're talking about, and how to change it differently, and think about it a little bit differently. And I would love anybody's perspective, hear you guys, and I would also love to have some of you guys on the channel if any of you guys are willing to do that as well. So moving on to the next point here, what is my current cash allocation percentage at this point? I'd say it's less than 3%. Actually, let me check. I just opened up my my stocks tracker here. So some of you guys might be familiar with how I track my investments. I utilize an automatic tracker that I made in Apple Numbers, and it's taking a second to load here. But I shared it with people yesterday, a portion of it at least, when I discussed how much I got paid in November dividends, which is around 700, close to 800 bucks, and closing in on about 170 bucks for the month of November in terms of YouTube income. So hopefully get that bad boy up to over 200. But let's see here. How much of my income? It's taking a second. I don't know why it's taking so long to load. But I would say initially, off the top of my head, probably less than 3% is actually coming from cash at the moment. Here it is. It's starting to show up now. But yeah, for October, I was buying like a crazy man. Like September, October timeframe, I remember, I was on my phone just checking for deals, and of course added a little bit to my M1 Finance account. I got Johnson & Johnson 3M in there. Purchased some more Johnson & Johnson in October, I think, and purchased some more 3M in October as well. Caterpillar purchased a good bit, purchased about 30 or so shares of that. And so that put a damper, a damper on the portfolio cash position. But have about $2,000 or so in my individual brokerage account. I have a decent amount as well in my savings account, and we are zoomed in real close right now. Let me zoom out, see what kind of cash position we're at. So cash at the moment, we are at 1.4%, so real low. $3,500 in cash at the moment. That might be low. I'm trying to think. This doesn't include checking account though, so if I were to include checking account, that's got some cash in it as well. It's about double that, so probably close to 3% if I were to include my checking account, which, depending on how we're looking at the end of the month, in terms of how we're, hey man, Korea, that's wow, that's crazy. Sorry, I just saw that jump up on the screen. That's wow. Share with your friends, man. I'm really trying to break into the Southeast Asian market. I know there's a lot of folks from India. Really been trying. My one friend's from India that is here. She's probably not watching. Trying to get her to watch the videos, but trying to get her to share with her friends. She says her friends are really into investing and they're from India, and really trying to break into the Southeast Asian market, man. And maybe it's the fact that I need to translate some of my videos, but a lot of my viewership's from Canada and the US. But anyway, back to that. So probably around 3% if I were to include the cash in the accounts, but hopefully Maui, wow, crazy. Oof. It's a humbling experience so far. But anyway, back to the live section here. So automatic investing, total stock market index instead of overthinking it. Yeah, I think that is a good point. Investing with AA Ron. I think overthinking it, sometimes people get in their head a little bit and they get too emotional. And so it's a really good point that you're kind of putting on there. So always wanted to know, what is allocated assets? Allocated asset is your cash. You're only new to investing. So I guess I'm confused about the question, so I apologize. But allocated assets, maybe it's asking about your asset class, whether it's real estate, stocks, is it cash, or is it your own personal business? But then you can start dividing, say, stocks into something more more minute, which is maybe this will help, is trying to understand, maybe it's also trying to understand excuse me. So maybe what it's trying to do is understand how your portfolio is split up in terms of assets. Is it based off portfolio value? Is it dividends? Are you looking more along the lines of, is it real estate? Is it a business? Maybe it's also trying to understand how much debt that individual might have comparatively to how much they have in assets. And it really is dependent on, what kind of context as well. So some of my favorites are Texas Instruments, Altria Group. Whoop, just did a big jump. Didn't mean to do that. Apple, ABGO, Starbucks, TTWO, and J&J for the next 20 to 30 years. That's pretty good. I'm not going to complain. I wish I bought some more Texas Instruments, but never got around to it. Do I follow Jim Cramer on Mad Money? Not as much as I used to, so I don't have cable anymore. And so I generally just utilize Netflix and things along those lines. And I got to figure out when Disney Plus comes to Trinidad here, but I watch some of his videos on YouTube every now and again, but most of the time he has some good insight. He's a swing trader, and so he makes his money off of swing trading, and he has a very different investing strategy as well. He says you probably shouldn't have any more than 5 stocks or so. Maybe he said 10, but no more than 5 to 10 stocks, so you can pay attention to all their quarterly earnings reports and understand if it's something you want to be involved in. And I think that that's pretty wise. I think a lot of people just kind of shoot at the hip. And I'm not going to lie, I don't watch every single investing report that comes out, but I do concentrate on a good bit of them. First Solar I always watch BHPs, Exxon Shells I always watch BPs as well. Procter & Gamble, Altria Groups I always look at, Wells Fargo I always look at, and so it's a hobby of mine. Maybe you're not interested in reading it, and maybe you're not interested in seeing how the company is doing as a baseline, but I love that sort of stuff. So he's a real big advocate for swing trading and knowing what you're investing in and all that. So read one of his books. Do I have them? But Get Rich Carefully is a good book. If you haven't read it, talks about that sort of strategy and talks about the cycles of investing and when you should invest in certain things depending on when the cycle is. If there's an upcoming recession coming on, maybe you should get out of, let's just say, for instance, technology stocks and into something less cyclical, like Procter & Gamble's, your Johnson & Johnson's, which is more healthcare related. So really good book, kind of gives you a different perspective. He used to run a hedge fund on Wall Street and he was pretty successful at it. So it's got some really good insights. It's a really good book for those of you that are interested in reading more about swing trading rather than dividend investing. That's good. Canada, yeah, I have a lot of Canadian followers. I love those guys. They're always chiming in on the comment section. I think actually the most people that are in the WhatsApp group, of the 15 or so, I think probably half of them are Canadian. They always talk about Canadian this, Canadian that, and it's a really good, interesting perspective hearing things from their side, because of course they all make their money in Canadian dollars and then they try to some of them diversify into US dollars because it's maybe a little bit more stable. So I got a decent amount of perspective now coming from Passive Income Investor, because he's obviously investing from the Canada side, but he invests in a lot in US dollars as well. So question from someone that's not US investor. So if you get taxed 30% on dividends, no capital gains tax, and pay 15% on every deposit you do monthly, or $15 on every deposit you do monthly, and you invest 50% of your salary, which is around $2,000, would I do it? Let's see. Do you also have to pay a foreign or a transaction fee, or is it free? That's a good question. But I think that 30% is not too big of a deal. I mean, I think most people pay 15 to 20% to invest in the US most of the time. So I personally, depending on what I'm investing in, I'd probably say my average dividend tax rate's around 20, it's probably close to 25%, just because I invest in a lot of REITs and stuff like that. So that drags it a good bit, and I invest in a decent amount of partnerships as well. So that being said, I'm not exactly too sure if I'm in the 20% dividend tax bracket or if I'm still in the 15%. If I'm in the 15, then that's golden. But yeah, I mean, it really depends on what else you'd be investing in. I mean, I'm not sure if you can invest in real estate in your area or not, but the fact that you are able to pay no capital gains tax is really good. So you think about it in that respect. Most people, if they don't have a tax advantage account and they grow a portfolio from $100,000 to $1 million, they'll have to pay $150,000, or let's just say you invest from $100 to $1 million to make it real easy. So basically your capital gains is $1 million. Most people, depending on what tax bracket they're in, if it's long-term capital gains, they've held it for over a year, this $1 million portfolio that they're now going to sell for $1 million profit, they would probably have to pay anywhere between $150,000 to $200,000 in just capital gains taxes. And so you wouldn't have to pay that. So keep in mind that, yes, you might be getting taxed on 30% of your dividends, and let's say you have a 5% tax, so your actually effective dividend yield is, say, $35,000, because obviously 30% off of 50, or 5% rather, is 3.5%. 3.5 into $1 million is, let's say, 35,000. You basically are only getting taxed, say, $15,000, or sorry, am I doing my math wrong? Yeah, $15,000 because of that 30% tax, but you're able to offset that by about $150,000 to $200,000 based off the fact that you wouldn't have to pay that long-term capital gains tax. So think about it that way. it's a two-way street, right? Yes, you'll have to pay money on the capital gains, or sorry, the dividends, but not on the capital gains. So it's extremely interesting. I personally would probably do it. I mean, if somebody said I had to pay 30% now, I would probably still do it, and especially with capital gains taxes. I mean, I'm sitting on probably the amount of money I've probably paid in taxes based off of capital gains is probably pretty much up there. It's probably about as much, if not more, than I've had in total dividends as a whole. So I've probably had, like, let's say $50,000 in total capital gains that I've had to pay, depending on how quickly or long I've held them, 15 to 30%, depending on, if it was long term or short term. So I mean, thinking about it that way, it evens itself out and offsets. And so depending on how sort of long of a term investor you might be, that's something to definitely consider. I personally would say keep going with it, unless you can find a better deal elsewhere. I think a lot of people get hung up on taxes, but they're like, oh, I don't want to pay 30% tax, but it's like, at the end of the day, don't let 30% destroy the other 70% that you're going to be making. It's like, if you always are concerned about taxes, you're not going to do anything, and you're going to lose sight of the prize. And unfortunately, unless you can find somewhere else to invest, maybe go invest there. But just because, like, I know so many people, they're like, I'm not going to invest $1 over $19,500 because that's what I can invest in my 401k. It's like the only person you're screwing there is yourself. I mean, if you're saying you're not going to invest, say you make $100,000 and you only spend $50,000, and that means you got, say, $30,000 left over, and you invest $19,500 of it. It means you have $10,500 left over to invest. Otherwise, this is going to be sitting in the bank. You're like, I'm not going to invest that $10,500. I'll have to invest it in a taxable account. Why would I invest in a taxable account? It's like, because you still walk away with like 85% of your dividends coming from whatever you're investing in, and you only have to pay taxes on whenever you're selling. So unless you're day trading, I mean, you won't maybe have to sell or pay any taxes on those positions for another 20, 30 years. So it's like, it doesn't make any sense as to why, I think people have this mindset that like taxes are bad, so you should always avoid them. It's like, taxes are inevitable. You're going to have to get over them. Just like eventually, you're never going to get away from paying taxes. So don't stray away from it unless you have a better opportunity, which is, IRAs and 401ks and stuff like that. But I mean, anyway. So yeah, back to the Korea comment, Maui comment. It's crazy. Can't believe it. Undervalued stocks, in my opinion. Then I kind of caught up with all the questions. So hopefully we get another tranche of questions, because we went on a pretty good roll there. And we had about a decent amount of people ended up leaving before we had about 40 people up here. So we've lost about a third of the viewership. It's probably something I said, maybe because I started talking about cryptocurrency. But what's my largest energy position? So let's double check here. So currently about $55,000 invested in the energy industry. And I think, Abdullah, are you the guy that messaged me on Instagram or not? I think that I had somebody messaging me on Instagram, and I think it was you, but I'm not 100% sure. So let's see. I have 9,000 in BP. Yeah. Okay. Cool. So we've had that conversation sort of before. BP Midstream, I have another 7,500. Chesapeake of $58. 5,200 in Cheniere. Cosmos Energy, I have $3,500. Phillips 66 is 5,000 if you want to consider that an energy stock. I do. 3,500 in Royal Dutch Shell. $24 in Seadrill Partners. Jesus. So there's that, and then I know I have Exxon here somewhere. BHP 6,100 if you want to consider that energy, but I'd say it's more materials because they're a natural resource company. Where's my Exxon? Exxon's 7,300. So I think BP takes the cake by about 1,500. And then if you combine BP and BPMP, then it's a pretty big chunk of change. I used to have more Shell, but it jumped up to the $60, maybe $70 range, and I sold half of my position. And I think that's because I had so much in energy investments. You guys can't see it, but maybe I'll flip around the camera for you guys here. But whoops. Let's hope that I don't hit any buttons here holding the camera this way. So you see this big yellow piece is the energy aspect of things. This is the 30%, and 22% of the portfolio value is in energy stocks, this big yellow wedge, and then it's followed behind real estate and financials here. So which one of those is increasing the fastest from your additions? So I haven't invested in energy stocks a while now, just based off the fact that, well, I guess the last one I invested the most in, or just invested in general, was probably BP Midstream Partners or Exxon. So Exxon is probably the one that's grown the fastest over the past 2 years or so. Maybe you could say BPMP, because I invested in that recently as well. But there's that. Thoughts on Nokia? I don't have thoughts on Nokia, not because I dislike it or anything like that, but I just have no due diligence done on it, so apologies. Aramco's coming to the energy sector. Yeah, I'm curious. So they're not coming to the U.S., so that would require me to invest in London Stock Exchange, at least unless they change their mind. I know they were originally going to try to come to the U.S. Stock Exchange, and then they changed their mind, I think, because of all the issues with people, our banks, I think, getting upset with them, trying to underwrite, and I don't necessarily know. Quick question from Gen X Dividend Investor. What portion of my 401k is in dividend stocks? And the answer is I don't know. Let's see, do I have a breakdown of the portfolio percentage anywhere? I don't know if I do. I don't think I do. I used to, and I think I got rid of it because I didn't really share it too much, so I don't think I transferred it over. But I think, so at the moment, if this thing catches up, I think I hit too many buttons. But I think the 401k is about 130 or so thousand of the total portfolio value, so it's about a third. I generally speaking just keep it in the S&P 500 or cash, depending on what I'm in. At the moment, whatever percentage is in the S&P 500 is probably about what it is. Considering diversification important, what's my opinion on focusing on a few or just one or two positions when just starting a dividend investing strategy? Example given, less than $2,000 invested. I really truly think it depends on your area of focus. I mean, if you personally, let's say you're a real estate agent, or you work as a real estate underwriter, and you have a decent amount of knowledge, insider knowledge, because you have sector knowledge about, say, real estate and where the trends are heading, because it's something you study every day, maybe it's something to potentially invest more in rather than something that you don't have as much knowledge about in that position. So if you say, like, know a decent amount about amusement parks, maybe you invest more in fun. I know somebody just asked about fun, or also maybe you invest more in like something like Six Flags, or if you know more about like warehouse companies, then maybe you invest in something like Stag Industrial. You study that. Just like people that are in tech, generally speaking, always invest in technology heavy stocks. So really, I think it depends on if you have focus or niche, and then also if you are planning, and maybe you don't work at a specific sector, but you plan on putting a lot of time and effort into reading reading about specific sectors because they excite you, then it's kind of the same idea. If it's something that you're going to have more insider knowledge on than a different sector, then maybe it's worthwhile. So yeah, some people are saying that my previous stream has no sound. Those comments are kind of coming through, so let me take that off so people but anyway, trying to think, is this the one? Hopefully this isn't crap, which one are we on right now? I think that's the one. But anyway, let me try to keep talking while I'm doing deleting and multitasking. I think this is it. Bless us see. What other kind of questions we got here? Not worried about it producing sound because there was no sound, so I'll just let it go. Do you still see opportunities in the REIT market? I do not know because I haven't done too much research in the REIT market for quite some time. I personally think that real estate investment trusts have skyrocketed in price over the past couple months or so, and so it makes it a little bit difficult to invest in something that's skyrocketed. However, I know that the prices have come down slightly from real estate investment trusts over the past couple days, so maybe, really all depends. And yeah, there's that aspect of things. Why is this being difficult? Sorry, I'm trying to delete this video and it's not having it. Edit title, I don't care about the title. I'm trying to delete. So yeah, what other questions do you guys have? I'll answer anything. I know there's a couple questions kind of hanging out in the background, and apologies while I catch up here. Hopefully that deletes here. Open up an account here in Canada with TFSA, dividends and capital tax-free, but just found out investing U.S. stocks, I'll be taxed 18%, plus the obvious money power decline. The reason I want to be in a TFSA is to avoid taxes. What would be your thoughts on this matter? I'm not going to answer Gen X dividend investors' question about which of the 11 sectors do I feel most confident, because I think he is seeing through what I was saying earlier. So yes, obviously you want to invest in the TFSA because they avoid the taxes aspect of things. But what would be my thoughts? So I think it's all very dependent on you. I'm still trying to understand what you mean by the money power decline. I think investing in U.S. stocks might be more beneficial because, at least from what I've understood from people, the Canadian dollar has decreased in value by about 25% in terms of the comparison to, say, the U.S. dollar. I'm not exactly too sure about how it is against the euro, but yeah, not 100% too sure about that. I don't think being taxed 18% is all that bad, actually. I think that that's something that I would utilize to my advantage. I think I personally, depending on, I don't remember if I'm at 15% or 20% dividend tax bracket based off my income. So it's not too bad comparatively to, hey, Ryan, thanks for joining, brother. I told people to keep me on track. I think, just let me know. I think you and Lydia are starting 9 Eastern. I think I'm an hour ahead. I think it said it was going to start at 10 p.m. for me, which would be 9 p.m. New York time. So just keep me in mind. I don't want to run into your guys' time. So just keep me honest. I told people I really want to watch that. But yes. So actually, Daniel, for you, 9 p.m. Eastern time. We're good. All right, we got 2.5 hours. Daniel, I would reach out to Passive Income Investor. He is a heavy proponent of Canadian TFSA usage. I personally don't know much about it, but he would probably be your guy for sure. I don't know if Kyle is still in here or not, but I'll send you to his channel. Let me, excuse me while I pull him up. But he's my my native Canadian investor that knows a crap ton about investing in the Canadian stock market. So let me see here. Passive income investor, that's awesome. So this would be my guy. I know he invests heavily in both US and Canadian stocks. So, and I want to say that there's a few others. There's definitely a lot of others on the channel that you can ask to, but or ask as well. But also, if it's something that you're interested in, there is a lot of Canadians in our WhatsApp group, and they talk about this all the time. We were just having a conversation earlier about Wealth Simple, or was it Wealth Front? I think it was Wealth Simple, and I think they have 0%. What is it? 0% commission. Yeah, Wealth Simple, 0% commission, and we were talking about how they charge you a 0.5% management fee, and I mean that's high to me. And then we started getting into discussion as to that's not that bad, and I was like, well, considering a lot of the ETFs that I'm investing in, JMac, and a lot of other those financial gurus, or not gurus per se, but people that are heavy into ETF investing, they're paying 0.05%, which is, you think about it, 0.45% less or 90% less than you would be paying at this 0.5%. So unless they're doing magic with it, then I would be weary of investing in Wealth Simple. But who knows? I think that that's probably the company that's trying to automate things. So in that respect, if you're able to maximize returns, that might be something for you. But we were having a conversation about that. So just reach out to Kyle or Passive Income Investor. We'll see how that goes. So don't think that diversification is as important as people think. 25 stocks are more than enough for small investors. Don't necessarily disagree with that, but also, I mean, 25 individual stocks, like somebody is investing strictly in, say, all technology stocks, are they diversified? And the answer to that is no. So, I mean, there's 11 different sectors, and I think they just need to be conscious of, maybe they don't want like one or two of the sectors. They don't believe in utility stocks or what have you, but I think if it really also depends on how often they want to look at their portfolio. If they just want to buy stocks and let it, be simple, they don't want to buy and sell or continue to add to certain positions, and do any swing trading or anything like that. Maybe the ETF route is something for them. Maybe it's more passive and something that they would enjoy more. So it's very, very dependent on what people think they should be doing. It goes back to how people see their objectives and how they want to set their investing strategy back to their objectives. So did I go over MJ stocks? I personally don't invest in MJ stocks directly. I have a partial investment in MJ based off the fact that I have an Altria Group investment and they invest in the Kronos Group. I'm not exactly too sure about that aspect of things, so I have a roundabout way to invest into MJ just based off the fact that I invest in Altria Group and Philip Morris. I don't know if Philip Morris has any aspect of their business that's invested in MJ, but I know Altria Group invested partially into Kronos Group. So cookie cutter tax advice. So you made $5 and lost 20% on something else. You haven't sold a 20% loss. Should you sell it for tax consequences? I mean, that's not something. I mean, that's all, Jordan. That's all something that's really up to yourself. I mean, I wouldn't throw a 20% or a $20 loss, down the hole, just because you lost 20 bucks in a day. I mean, that's something that you need to consult with yourself. If it's a company you don't want to invest in anymore, then that's your answer, right? I mean, to sell it. But if it's like, say, something like Apple, and you think it's go to the best stock of all time, or you have confidence in it, and I wouldn't throw the baby out with the bathwater, is what I'll say. Just because I don't know if that's the right term, but that's what I said. Just because you made $5 and you end up having to pay, let's say $1.50 in dividend taxes. I mean, don't sell a position if you have a lot of confidence in it, just because it's going to have a tax loss harvesting sort of effect on it. I mean, I personally, for me, I would rather. So some companies I invest in. So I invest in something called computer shares. It's I think it's less than 5% of the portfolio. But for example, my Exxon shares. I think now, let me double check, but I think I should be getting paid about $75 a quarter in Exxon shares now, and they automatically take out the dividend taxes for me. And so I'm immediately losing out 15%. And I'm upset about it because, the company shouldn't decide whether or not I want to pay that 15%, to them immediately, or if I want it in more shares. I personally would rather be able to acquire 15% more in shares or whatever they end up charging me, and pay the taxes in cash so I could have more shares in Exxon, than having them take it and me end up only getting 85% of what I would be getting in shares. So hopefully that makes sense. But I wouldn't. I mean, taxes are inevitable. I mean, that's part of the game. I mean, you're still walking away with 85%, right? I mean, so yeah, you might have to pay a little bit, but like I said, I mean, it's all about putting things in perspective. You might lose 15% due to taxes, but at the end of the day, you're walking out with a good chunk. So yeah, making, what is that? 370 divided by 4. I don't know what that is. $90. So $90 a quarter in dividend income, and I'm walking away, with almost $15 away from that. And I'd rather take that $15 and invest me into, almost another 20% of a share from Exxon, rather than them telling me that they're taking the $15. So yeah, Ryan, that's a really good question. Portfolio's in good shape. I really appreciate that. And you shouted me out a little bit yesterday. Really appreciated that, bad boy. Yeah, I mean, I was just doing some talking, I think, in one of the videos. I don't know if it's one that I uploaded for next week or that I'm planning on uploading for next week, or if it's actually one that I uploaded yesterday. I'm getting confused now because I recorded two. And yeah, I mean, think about it. I mean, I remember my first couple of years, I wasn't even investing $11,000, and here we are, next year being able to reinvest $11,000 in dividend income. And then I was starting to understand, think about it. Last year, I was fortunate enough to get, I think, a 8% dividend growth rate. So just on $11,000, I mean, that's, over $800. If I were to continue into 2020, going from 2019 to 2020, all those companies would raise the dividend 8%. I mean, that itself will get me to $12,000 in terms of income without another investment. And then you think that, say, $11,000 being reinvested at 4.5%, which is what the dividend portfolio is currently yielding, that's another $500 in terms of income just from dividend reinvestment. So the portfolio is really starting to take a shape of its own. I'm fortunate that most people can't invest $11,000 a year, just because where they are, and I'm able to invest. That's like an additional 10% of the salary, maybe a little bit less, maybe a little bit more, but it's allowing me to automatically reinvest a decent chunk without even thinking about it. It's like an additional hand helping me out, which is phenomenal. But the thought is, because, and this is a really good point, is is I am getting to the point where at this point income is becoming a problem in terms of taxes, and if I were to invest, it would be for depreciation. But the problem that I'm having is I don't necessarily want to invest in, say, single family homes, and so I do a little bit of the Fundrise, I do a little bit of Cardone Capital. Whether or not those are wise investment decisions, I'm not entirely too sure, but it's a really small portion of the portfolio. But I have thought about as well doing real estate investing. But at the moment, for where I am in my career, I think some people may or may not know, but I'm currently living in Trinidad and Tobago. I was living in Houston before, and had really good meetings with some of the folks last week, some of the executives, and who knows? I mean, maybe going to a different eastern part of the eastern hemisphere isn't out of the question either. So I would have to find somebody local in a market that I would trust, and do more turnkey investments if I were to do something. And at that point, would I actually be getting depreciation at the end of the month? And if it's a partnership, maybe. But if it's someone that's just asking me for, say, passive, not passive, but capital and giving me loans and stuff, it makes it a little bit more difficult. But yeah, I'm not 100% sure yet. It's something that if I were to maybe settle down and find somebody that would be a good portfolio manager, it's something I could put money into for sure. Houston's not a bad place to put some money. I think the prices have come down slightly. They were getting pretty hot, especially in the 2014, 2015 timeframe. But oil prices are kind of hanging out. A lot of supporting people of the oil industry are starting to potentially leave and go to other places like Seattle. I know a couple people that we're buddies with that moved to California. So it really all depends, but it's not, Houston's not like it used to be. There's still a decent amount of oil. They still have a lot of health centers and stuff like that now. Oh shit, I didn't know you lived in Spring, man. That's awesome. I'll have to, Christmas time when I come back, I think I had to stop in the office and meet up with some folks, meet up with my VP that's sponsoring my trip down here. I need to, maybe I'll catch up with you because I might spend a couple days in Houston meeting up with some folks. Have some good buddies that live in, where do they live? Some of them live in Cyprus. I think they might have moved out though. But Sugarland, a couple folks live in, and some folks that live, I'm trying to remember where he's at, man. Where's my buddy Stevie at? Stevie Rosenberg. So my buddy Stevie lives in Rosenberg. Oh, okay, Virginia Beach. Yeah, I'm not going to fly to Virginia Beach. No problems with Virginia Beach, but never been, but thought you were still there. That would have been crazy. But anyway, let's kick it on down. So yeah, I'm not against investing in some real estate, but we will see. All good. Maybe I'll meet up with you. Get a cup of coffee. They just opened up In-N-Out in Katy, so I'd be interested in seeing that. Haven't had In-N-Out in a while, so let's see. So Wealth Simple, we're getting back on that. Sorry, I'm getting a little bit down. Now I'm feeling more like Ryan. Ryan's always got questions for days. Normally, my streams don't have a lot of questions, and it's like 5 minutes of me begging. And now I'm feeling more like my boy Ryan, having questions in the hopper, ready to go. So someone started investing last month. So Jordan, there was an article that I put up a little bit earlier. It's I'm not saying it's the be all end all. It's definitely a spot that you can start. But I think for someone that's relatively new into their career with investing, I wrote a nice little article that might be helpful for you. Especially if you're just getting started, and it's centering around the first 5 or so things you should think about before you really start getting investing. But I think in all honesty, the best thing for you to do, I'm not sure what your age is. I think you're relatively young. I think you've stopped on the channel before. But I think you're in your 20s. I'm not 100% sure. But I think one thing that a lot of people think about is, should I still Hey Lydia, looking forward to you and Ryan's chat a little bit later. Luckily, I got 2.5 hours to cut this thing down so that everyone can jump over to Ryan's channel. But yeah, I think what a lot of people think about, especially me, being younger, but I'm not even close. I got a couple years to 30. I think a lot of people think about, oh well, a recession's oncoming, and that's understandable. I can understand the emotional angst associated with that. But yeah, so you're in your mid 20s, and that being said, if you're investing for when you're 50, 60 years old, don't let the next 1 or 2 years dictate the other 95% of your investing career. Be smart and figure out, yes, you might have some money in there now, but you can really start chipping away $100, $200 every single month, and it's really going to help you in the long term if you do that. And I think a lot of people always focus on, I have $1,000, $2,000 today. What do I do with it? And that's not even half the equation. That's the start of the equation. And I think the remainder is it's a mindset that you really need to change and chip away, month after month, year after year. I put a really good analogy up earlier. If you say invest $1,000, $2,000, and yeah, man, you're not messed up. I think that $20 is a lot when you're first starting out. I was the same. I was telling people when I first did Sirius XM, back in 2013, 2014 timeframe, I had $500 in it. And I was checking it every day. Now I look at my tracker, and sometimes I see it goes down 2,000 or it goes up 2,000, and I'm not phased, because what I'm caring about, you need to understand and put in perspective what you're caring about. And it's kind of like, like what I said earlier. I mean, don't let that $20 impact your $1 million decision later on down in life. If your goal is $1 million at 50, 60, don't let that $20, impact your other 99% of what you're aiming for. Granted, those small $20 can add up. I mean, if you're making $20 decisions here that are wrong, $20 decisions there that are wrong, you can end up with yourself in a hole. But just think about the long-term perspective, and hopefully the article I wrote there, the five crucial things to think about before you really start getting investing. Hopefully that helps out a little bit. I know it's nerve-wracking when you first start. I started and I had the same thing. $500 was a lot of money to me back in 2013, 2014. But if you continue to add up, that $20, you won't even be thinking about it. You'll be saying, okay, that's normal. It all comes with the size of the portfolio, what you're used to, getting used to it. And maybe at that point, maybe you'll start getting concerned about $2,000. And at that point, maybe you start getting concerned when the portfolio starts growing. But you think about it, $20 in the grand scheme of things, when your goal is $1 million, $2 million, maybe $3 million. I mean, heck, you're young. You got time on your side. Starting at 25, that's really commendable. The world's your oyster. You can do anything with that sort of investing mentality, especially if you're getting started so early. Proud of you, first off, and that's something to keep in mind. But yeah, keep up with this. A lot of great people in the channel that can help you. You got Hidden Freedom, you got Independent Investor, you got AA Run, you got Lydia, you got a lot of people. Yeah, just remember us when you got the boat, and we all of us in the channel here steered you down the right direction, and that we can all have a party and rejoice when we all steered you down that billionaire sort of direction. So otherwise, good reads. It really also depends on what kind of investing you want to do. I personally do dividend investing, not saying that's the only way to invest your money. You could do day trading, you could do Forex, you could do swing trading. I do a little bit of that as well. But I think you also have to put in perspective how much time you have and how much time you want to put into your portfolio. Maybe you want to be very passive, so keep that in mind as well. Good books to read depends. The Intelligent Investor is a really good one. Warren Buffett's one of Warren Buffett's favorite books. But I think to put yourself in a good investing mindset, one book that I've been meaning to read but I haven't, Richest Man in Babylon. I think that somebody else, I think it might have been Ryan, was talking about it. Richest Man in Babylon's a good one as well. I personally want to read that. Maybe I'll buy it on the way home when I have some time, because I leave tomorrow for the U.S. And what else do we got? Get Rich Carefully is a really good one. Another really good one is Think and Grow Rich by, is it Napoleon Hill? So yeah, I mean, there's a lot of good material out there, and not saying you need to do exactly what all those people say. Rich Dad Poor Dad's a really good one as well. You need to do exactly what they're saying, but utilize it to help shape your mind and think of yourself more as as an investor long term, and really understand that this is a 20, 30 year mindset shift rather than a today shift, right? So yes, it starts with today, but it's forever, right? And hopefully that helps out. So we're heading to a recession. Why would companies increase dividends more? No issues. I mean, there's some companies that never decreased their dividend. There's some companies that never decreased their dividend in 2008. There's some companies that didn't decrease it in 2000, 1987. So there's been plenty of recessions now where some companies just never had the point where they needed to really take an impact. Some companies like Johnson & Johnson, Northwestern Natural Gas, I mean, is another one. Coca-Cola is another one. I mean, there might be a recession on the news, but sometimes you can't necessarily listen to what's on the news. The news might be more concerned about that day. The news is trying to, I mean, I have a whole spiel about news, whether it's political, economic, geopolitical, geographic. I mean, I got a whole spiel for you, but the news is trying to sell ad revenue just like people on YouTube. So it's almost like they're trying to clickbait you, but in real time. So the headlines you might be seeing, recession this, recession that, you know, it's real. I'm not going to lie. I mean, there's potential for recessions, but you have to think about it in the grand scheme of things. You know, companies like Coca-Cola, people aren't going to stop buying Coca-Cola overnight unless something drastic happens. You know, it might be recalls or something like that. Just like what happened with Johnson & Johnson and the asbestos thing, but they got out of that, right? So they found out that there wasn't real. It was poor lab data. But yeah, I mean, it really depends. I mean, it really depends as if you're investing in something that's recession proof or has a long-term track history of during recessions doing really well. So some companies might be really short-sighted. There are some companies out there with, I'm not going to lie to you, poor dividend increase strategies. They might increase the dividend even though they know for a fact it's going to in the short term mess with them. But you know, in some instances, some companies go into debt to pay the dividend. I'm not going to lie to you. Apple's one of them. Just because they go into debt to pay the dividend, though, doesn't necessarily mean it's a bad thing. Short-sighted meaning like 1-2 years. It might be detrimental to them for 1 or 2 years. So paying a dividend, and you know, when they have earnings misses and stuff like that, I mean, it really all depends. It might go into debt just to pay the dividend, which is putting them in a bad financial position for not just the next 1 or 2 years, but in the next, say, 5 to 10 years, because then they're going to have, you know, the debt to repay, then the interest on top of that, and it really all depends if a company is really cyclical and really think about it. I mean, you could have companies that have issues even during strong bull markets. Keep in mind companies like BHP that had a complete dry up of commodity resources, commodity pricing in 2014, 2015. They had oil, they had nickel, they had steel, they had all these different commodity prices in 2014, 2015 go down the tank, and they said, we're changing our dividend structure. We don't care, and I'm personally for it. I mean, if they're not making money, I'm not expecting the company to go into debt to pay me. So they have something like a 50% minimum payout ratio. I'm fine with that. If they make they make $10 billion, they're going to pay out at a minimum $5 billion to shareholders, and I'm fine with that. That means they have $5 billion to go fund their capex. But if they lost $10 billion, I'm not going to expect them to take out another $5 billion in debt just to pay me. I mean, that doesn't make any sense. It's putting the company in a worse financial position in the short term, and could actually impact the long-term financial health of the company. So sometimes I'm not 100%, and I think sometimes that's why companies do dividend buybacks as well, because it doesn't. It satisfies both people. Some people prefer buybacks. Some people prefer dividends. I'm a dividend investor personally, but buybacks I can understand. Buybacks, you can announce a buyback for 1 or 2 years, and you'd be okay with it. So that company is BHP, ticker symbol BBL, and then there's also ticker symbol BHP. I personally invest in BBL. I think it was for tax reasons, but I don't remember. They might have got rid of it though. There used to be a franking tax on one of them, just like how Shell had 2 different companies. But yeah, so keep that stuff in mind. I know there's a really long roundabout way of explaining why companies might increase the dividends, but I think a lot of times there's a lot of stress on companies to try to make themselves look good. And also keep in mind that a lot of the board holders, board members, CEOs, they all get paid a lot of their money in stock, and so if they're only going to be there for 5 more years, they don't necessarily care what the company does in 5 to 10 years. So they might have insight, and insider knowledge of what's going on 5-10 years down the road for strategy that they might not have released to the public yet. So keep that in mind. And they get paid in dividends. So if they increase the dividend 10%, they just increase their dividend to themselves by 10% as well. So keep that in mind. Got to keep that ordinary income low in order to pay 0 once you fire. Yes and no. Yeah, single people, it's below 12,400. It's really good insight. So Hidden Freedom Investing earlier up here is talking about how you don't have to pay any taxes on something if you're making below $12,000 a year. So if you're really living that low cost life, low cost living, that first $12,000 isn't taxed, which is nice. So yeah, Ryan is talking about how he might not necessarily put money into Cardone Capital. That's understandable. I wasn't a big fan of Grant either when I first started listening to him, but I think he speaks a lot of sense. We'll see what happens. So yeah, hopefully that series is helpful to some of you guys. I'm not trying to convince people into investing into Cardone Capital. I think the verdict is out. I personally still have my, how do I say this? My questions about it. If you're investing in real estate, how do I get a consistent monthly dividend coming from it every single month? Which is interesting. Some months I'm sure you'll have one property that needs this sort of capex. Another month that company or that building might not, might need a apartment renovation, or a wing of apartment renovations, or putting in a new pool. Or so the fact that it's been consistent is kind of curious to me. Still trying to understand that aspect of things, but it is what it is. Do I have an investment group? I personally don't go to an investment group. There have been folks that I know of that did an investing group. Whoa, just catching up. Sorry, way up. I know folks that. Am I going too far above? I don't know. I lost myself here. There we go. There we go. No, I don't have an investment group. So Warren Buffett books are really good. Yeah, I agree. Sorry, I'm just catching up. Lydia joined. Saw that when she popped up on my phone. Camera shy. Yeah, I'm looking forward to it. Picture everyone naked. That's funny. Yeah, so the live streams aren't bad. When I first started, I was kind of talking about this. The live streams are really bad when I was getting like 5 or so people. Now I think a lot more people are doing the live streams. J-Mac's doing a lot more. Obviously Ryan's on like number 75 or something absurd. I mean, he's killing it with the live streams. So I think people are getting more used to the live streams, and generally speaking, the community of YouTube creators that create in this financial sort of niche are used to it at this point as well. So Daniel, for me, the only time I invest on, say, a margin account is if I see a really good price. So I have a margin account just in case of emergencies. I personally don't ever utilize it. The only time I have utilized it might have been maybe, I want to say 3 times, and that might have been on like the 10th or 11th of the month when I wanted to buy a stock, and I knew that more money was coming in on the 15th. My paycheck was coming in on the 15th, and so I wanted to buy like $1,500 or $1,000 worth of stock, and I knew that the money would be automatically deposited within 3 or 4 days. So that way I'm not paying, daily, $5 or $6. I don't remember what it is, but I think it's like an 8% annual fee or something like that. So yeah, I mean, I generally don't utilize it to increase leverage. I know some folks that do. I personally am not for it. I generally don't invest money I don't have. So that's just me. But yes, I did, for doing futures and options. I think the Hidden Freedom Investing is right. I think I needed to open up a margin account in order to do that, and I wanted to start venturing into futures and options. And so I think that they're forcing me down that road, because I think it just starts leading up to different levels of experience in your accounts. And so I think they wouldn't let me do options and futures without having a margin account, and that was part of it as well. But I have utilized it once or twice just for a 2 or 3 day waiting period before, so I didn't have to move a bunch of money. Thoughts on swing trading for 60% and 40% for the S&P index? Hey man, I'm not going to steer you against it. I think if you have the time to put in for your investing strategy, I don't think it's a bad idea. I think the one thing that people have issues with, though, is that yeah, I don't necessarily have a good answer for that. I mean, so yeah, I don't necessarily know. I mean, if you think that it fits into your investing strategy, I'm not gonna say it's a bad idea, but just think about it. That works, cool. Margin's a terrible idea, maybe, for sure. Aristocrats would borrow money and pay dividends and cut dividends and not borrow. Yeah. Sorry, I'm catching up here. Some people, some of these I've already kind of like somewhat answered in a roundabout way. So, or I saw them pop on the screen and I answered them because I was talking to that individual directly. Most stable company they've ever seen. Yeah. 80% of the market is buying due to buybacks, so hope you continues. Jesse, thanks, brother. Yeah, hope it inspires people. Like I said, I'm not trying to convince people to do what I'm doing. Dividend investing works for me. But yeah, hopefully people can sit, understand, take a 50,000 foot view, think about what their time horizons are, their risk tolerance, how much time they want to put in, how often they're contributing to the portfolio, and what their objective is, and really understand their investing strategy, whether that's day trading, foreign exchange, who knows? It really all depends on what your objectives are and the answer to those 4 or 5 questions. So in terms of dividends, you prefer monthly dividend stocks or quarter? I'm not gonna. How do I say this? I invest in the company not because it pays monthly or quarterly. I also have semi-annual dividend pairs, and I used to have an annual dividend pair. Disney used to pay me annually, and they switched to semi-annual, which is fine with me. Excuse me. So yeah, I mean, BHP also pays me semi-annually as well. So don't necessarily have a problem with it. I know a lot of European companies pay semi-annual, annual as well. So no problems with companies paying semi-annual or annual. So yeah. But yeah, I do have some companies that pay me monthly, like Main Street Capital, Stag Industrial, Realty Income Corp. Is that it? I think those are the top 3 that pay me monthly. But I think some people get caught up by the yield trapping companies, and there are some companies that are yield traps that pay monthly. And I think what ends up happening is people will invest in a company because it pays monthly. They've seen, well, if you're able to compound something monthly, you'll be able to increase how much you have faster, and then they immediately correlate that to a company pays monthly, so they should invest in it without fully looking at the fundamentals of the company. And so yes, the company might pay monthly, but it might not be fundamentally a good company to invest in. That's why I only invested in 3 companies when there's 20 odd companies that pay monthly. So I prefer Realty Income Corp's a great company. It's triple net. Very low risk. The only risk that they have is that the fact that it's real estate and the common risks associated with investing in real estate. Triple net, meaning that they don't have to have a lot of variation in their operating expenditures. So the only thing that they really have to worry about is insurance claims about buildings that fall over, and maintaining the good contracts that they, generally speaking, are able to get into, 15, 30-year contracts with long-term rent increases built in and what have you. So Dante knows what I'm talking about. I mean, he's, Realty Income Corp is a phenomenal corporation. Triple net leasing in general is a really good corporation. There's a reason why if you want to buy a CVS or Walgreens, you're only going to get about 4 or 5% cap rate on that, because, I mean, you're not taking a lot of risk. I mean, the company you're putting in there is, a S&P 500 qualified company with, institutional backing and long history of being a great company with great cash flows. The only thing that you're really taking on at that point is, does the roof fall off and does it burn down? And then you might have to be liable to replace the building. But I mean, they're taking care of the interior maintenance. They're taking care of the taxes on the building, and they're paying you monthly, which is what the 3 N's are standing for. I mean, you don't have to worry about the property management. They're taking care of that. All you're doing at that point is you own the building and you're taking care of a contract. So, but then you have other companies and other buildings and real estate that you have to, you get a 12 cap for, and that's because it's maybe not in a good area. Maybe a 20 cap if it's in a really bad area. People don't want to buy that, and then it could be in an area that's might not return to appreciation. So at that point, you're buying it for cash flow. So it really all depends, just like anything else. There's cash flow value heavy companies, and then there's companies in the stock market and as well as in real estate. Buying something that is a cap rate of 20% is pretty crazy in terms of what part of town you're probably investing in. Other than that, you're really either a really good deal maker that was able to get you that. So I'm not too knowledgeable about the real estate aspect of things, other than the real estate investment trust that I invest in, but I did grow up around real estate, so I have a decent idea about multifamily properties and stuff like that. And it's not too foreign of a concept. I mean, but anyway, different story for a different day. Wish the companies paid monthly, usually limited to a small subset of monthly payers, and they're more risky. I would agree with that. When am I going live again? So I don't necessarily have a set time on when I go live. I was supposed to go live at 5:45, and then I really ended up going live at about 6 p.m. because of audio issues. So the guys that have been watching now for a couple hours, they've been with me. I originally had an initial issue started with my first live stream, and I had to switch over to my iPhone, which actually the quality of the iPhone's a little bit better in terms of the photo quality. But maybe what I'll end up doing with this trip back to the U.S. is buying myself a nice laptop. It's been a while since I got an upgrade, so we'll see. I've been doing more and more lives over the past 3 or 4 months or so. So hopefully continue to do that as long as I see that they're fit. What I want to do is more what JMac and Ryan and a couple other people have been doing is reach out to people that are investors in the investing community. Maybe even more like everyday people like Allgood. I think Allgood's one of those people that doesn't make any content. I think everyone's waiting for her at this point to increase the channel size. Not increase the channel size, but start creating videos of herself so people can understand. I mean, she's in more live streams and contributes more to the community than I would say, 85 to 95% of the people. So would love to have people like Allgood online, and there's a lot of other folks that are very into the community and on every single post and always posting insightful comments. So I'd love to have people like that, even though they're not necessarily be content creators. Love to have people like that on the channel to see. So I think everyone in the community feels the same about Allgood. So I've never used any dividends to pay bills. I know some people like PPC Ian have done something like that, and I think that's wise for him. I mean, he's partially financially free at this point. He might be completely financially free. I'm not 100%. What he's trying to do is just kind of make ends meet. So at this point, I have thought about in the past though, because there's many ways that I can take my life at this point. I'm 28. There's part of me that says, get to the point where, at this point, I'm getting to the point where I could live in 90, maybe not 90, but 50% of the world pretty easily and make a living off the income that I'm getting from my dividends right now. $1,000 a month is pretty good money, and then if I'm able to continue my YouTube income as well on top of that, that'd be a couple $100 a month as well. So that's really good. Hopefully I get to that comment before he leaves. It sounded like he was going to leave really quick. But where did I? Oh, so it's not too far away. So yeah, I mean, I have thought there's many different paths. I originally, when I was started investing, there was a mental thing in the back of my mind where I was like, once I get to $1,000 a month in dividend income, I'm going to retire for a month or two, or not a month or two, but a year or two, go to live in a different country and come back when, I'm ready, whether it was hopping around, do some island hopping. And, but now that I'm kind of there, I'm like, I'm not done. Right. And I feel like, yes, that's risky, but I feel like I could do that. But at the same time, is that what I want to do? So it is what it is. I think I'm going to get to the point where I'd be able to live in the US or maybe 90, 95% of the world financially free, and then make a decision like that. But I have thought about as well, if I wanted to work at my current job, what I do right now, I love doing it. I'm an engineer / businessman, international businessman now, because it sounds very exotic. So now I start saying myself, I'm an investor, international businessman, and engineer by education, because it sounds good. And I can then kind of use that money if I want to continue to do what I'm doing and invest in, kind of use that to supplement my monthly income. Because then at that point, if I'm not just looking at the income coming from my investments, but also my total, normal income, I could say, well, now any luxuries that I want, I would have to spend off of that income that I'm getting, that $1,000 a month or $2,000 a month. And if anything other than that, basic necessities would have to come from my normal income. So that way, in any case, if I needed to get rid of those luxuries, I could, and I would still have that to pay, a basic amount of basic usage. So anyway, different ways. I mean, there's infinite amount of ways to how to live your life, and it's all about how happy you are. So I consider that a lot. I mean, I really could. I really have the travel bug now. I want to travel a lot more, but I have this job that I need to attend to. And I also love that as well. So it's not like I'm trying to get rid of that as well. I mean, it's tough. Even if I was financially independent, I don't know if I would quit because I really love what I do and it benefits the world. So anyway, what do I think of Clorox right now? I know it decreased in price, but I haven't done a lot of due diligence on that. I'm not in the market. Yeah, I'll probably never quit. So yeah. Whoops. I think I skipped too much. So yeah. Blessings to all good. Everyone agrees. Saying hello, telling you're halfway to meet your mini goal of earning $1,000 a year. That's phenomenal. I know. Ryan was congratulating you as well. By the middle of February, you'll be at your first goal. That's $1,000 is a lot of money, my friend. That's I was just there a couple years ago myself, and I think you and I have had conversations about 6 months to a year ago, and the fact that you're able to do that is real good. Based off of I think you're I don't want to insult you, but I think you and I were talking, and you're a bus driver, if I remember. So just let me know. Hopefully you're not insulted or anything like that, but I'm trying to remember. I had a conversation with someone like yourself. Yeah, so hopefully that's you. Hopefully it's not an insult. And hopefully you don't mind me telling everyone, the 25, 27 other people that are in this room. But yeah, that's really good, my friend. I mean, based off of what you're doing, keep it up. That's really admirable, and the fact that you're able to do that, keep it all relative, my friend. $1,000 a year is a lot of money to a lot of people, and you're not too far behind me. I remember $1,000 being a huge sum, and getting that. Let me double check. So I was at $1,000. Crap, this thing. I'm pushing too much through this. $1,000, man. Yeah, that was just 4 years ago for me, man. Believe it or not. I mean, that was 4 years ago for me. 2015. I made $1,182. So it takes off on its own. It's got a mind of its own once you start getting to that point, my friend. And I think it's a pivotal point, and that's just the beginning for you. And like Ryan said, it's a nice amount of money in a lot of places in the world. And I think a lot of people always think of themselves like, I gotta make the money for living in the U.S. And being here in Trinidad, I can see myself living here in Trinidad full time. I don't need as much as I have been making in the U.S. To live here in Trinidad. I could easily cut. If I wanted to move down here, 20 to 30% off my expenses for that. If I wanted to move to Thailand, Vietnam, I could cut even more off of that as well. So, I mean, if you take our rich journey, for instance, they moved to Portugal. I mean, they maybe could have continued living where they were. I think they were in D.C., but because I think they were both government employees, but I don't remember exactly where they were living. But they moved to Portugal just because it was easier, it was cheaper for them to live. So you don't need to stay where you're at as well. I think a lot of people forget about that, but I know plenty of people, a lot of people are moving to Panama nowadays. So really admirable, really happy you're there. $16,000 is a lot of money, my friend. So keep it up, and hopefully that 16 will continue to get, I mean, think about it. I mean, you're reinvesting close to 5-6% of the portfolio now, and you're not even you're just able to collect that $1,000 and do whatever you want with it, whether it's reinvest it, use it to help pay bills or what have you. So crazy, man. It's really good progress. Really proud of you, and really hope that you continue to chime into the channel, because I think that's a really good success story. I'd love to have you on here as well, if you don't mind. Reach out to me, and we can hopefully have a live stream with you. I think that would be a lot of fun. Hidden Freeman investing, I swear. One of these days, I'm trying to think what. I'm trying to think of. So I talked to Kyle, passive income investor, and he's like, I don't understand why you're not letting people know what you do. And he's right. I don't really know why. I think now at this point it's just to upset Hidden Freedom investing. Tax-free state, then go live overseas, let your money grow, and you can come back to the U.S. if you want. Yeah, man. Commercial real estate, that's a good goal, my friend. That's a really good goal. Maybe you and me can meet up in the future. So I think I've told some of you guys about this. I smell Indian food. Somebody's making Indian food. I got to start knocking on some doors. But what was I going to say? Yeah, about 25% of my portfolio, eventually 20 to 25%, I want to have in real estate. So at the moment, I'm heavily focused on investing in stocks, real estate investment trusts, but I'm starting side businesses as well. YouTube is a portion of that as well. Oh man, thank you so much. That's my first super chat or whatever they're called. That's really nice of you. I don't even know what to say. That's crazy. Thank you so much, Hidden Freedom. That's wild. Never thought that would happen. So yeah, one of the key things that I wanted to look at is, I have these side businesses I'm doing, online businesses now with passive income investor. I have the potential other businesses, physical businesses that I might start as well. Real estate, which I want to do 20% of, and then what else is there? The stocks as well. So. And then cash also being a big thing. So 5 big pillars that I want to kind of get invested in, of which cash and real estate and stocks are probably the easiest. And then obviously I have the fourth one kind of going. And then you have income streams within there as well. So yeah, man, sentimental value for the $1.99 for sure. That's crazy. So yeah. How do drips work? Do you guys own any? So drips is really dependent as well. I mean, some people might get really into it. So yeah, it really depends on your brokerage account. If you're able to just reinvest your dividends, that's all it really is. I know Fidelity allows me to do it. Computer Shares allows me to do it. In fact, I don't know if there's any company that doesn't allow me to do it. And then you can easily signal whether or not you want to pool the dividends, which is something I've done selectively for my energy positions, or if you want to reinvest automatically. It doesn't allow you to drip, really. I thought it did. Oh, because you have to buy full shares. That's kind of a pain. So yeah, okay. Robinhood doesn't allow you to drip. It's kind of a pain. So free brokerages, yeah. Invested dividends and partnerships, units in commercial real estate. That's a really good opinion. Really good. Do you have a commercial real estate partnership in mind, or is there one in your local town that you're planning on investing in? Curious. Asking for a friend, and that friend is me, because that's something I would love to do the real estate investing, and I've done some of it, but I'm not about the active piece of it. Because obviously I might be working for the next couple of years before I potentially leave and do my own businesses. So yeah, I like the passive aspect of investing. I'll pay someone, a portion of it to manage it, but at the moment, yeah, it's a little bit difficult, and that's kind of a barrier to entry for me at the moment. TD lets you do it, dividend reinvestment. That's awesome. Wow, I did not know TD did this, so I guess hopefully Schwab keeps that. So TD lets you adjust the percentage and direct it to any investment within the program, which is similar to what M1 will let you do. So yeah, hopefully Schwab continues that, because that's really cool. So, do you pay taxes on drips? Yes, a lot of people answer. Sorry, my buddy Kyle called me there real quick. So yes, if it's a non-dividend account, yep. Sorry about that. You get them and you pay taxes when you sell your shares. So basically what ends up happening is, at least in the US, what ends up happening is you get the full amount of money, generally speaking. Yeah, exactly. Somebody's explaining it. You get the 1099 at the end of the year, and then you pay it. So it doesn't directly come out of your pocket, like some people that are investing in they're non-US residents. When they're investing, say from Canada or the Middle East or from South America, investing in US companies, they might take it out immediately out of their dividend positions. Just like if you were to invest in their foreign stocks, they would take it out immediately. But yeah, you generally speaking will get the full amount of dividends, and then at the end of the year they'll count it up in the 1099. So see, I'm curious, does anyone else have I'm still live, man, going on close to 3 hours. So yeah, my buddy Kyle just tried calling me and I declined him, so he's probably curious what the hell is going on. The percentage does depend on where you live. So yeah, curious if any Kyle, I'm curious if you have any questions. Yeah, you're probably like, there's no way this guy's still alive, which is probably why you called. But yeah, curious if you have any questions. You obviously had a question for me, but that's why you called. So curious what the question might have been. But yeah, anybody else have any questions? Otherwise, I might cut it early. I need to do some laundry before I leave tomorrow. My charting. Oh man, that's a good question. So we're having discussions, because I mostly have it set up for U.S. investments, but we're trying to get it set up for international investments. You can do international investments in investing. You just have to add a period. So for instance, if you're investing in, say, Toronto companies like Kyle, for instance, if you're investing in Bank of Nova Scotia, you do Bank of Nova Scotia and then you put .to, so bns.to, and it'll show up in terms of Canadian dollars rather than the typical U.S. position of BNS. I think it defaults to U.S., or maybe it does. I don't know where you are specifically, but I think it defaults to the U.S. Yes, you have to be accredited. I'm currently not accredited yet. I'm getting close in terms of income. I don't think I'll hit it this year, nor next year either, but maybe if I keep doing well in terms of YouTube and dividend investments, I might get to the point by 31, so 2-3 years from now, where I'll hit that $200,000 a year mark, maybe, fingers crossed. It all really depends on how well I do on YouTube. I mean, if this thing really blows up and I start making, $1,000 or so bucks a month, then I might be able to get closer, because that'll be 12,000, and the dividends themselves will be 12,000 on top of my income. So it'll get close up there. So hopefully get to the point where I really start going exponential. Everything's going really exponential at this point, but if it continues up that exponential curve, then yeah, I'll do my best. So but yeah, I'm trying to think. I don't know what else you guys want to talk about. Otherwise, I might just cut it here and then start doing some laundry so I can get prepared and pack up all my luggage and stuff. Yeah, so I don't know if we'll get a mill in the bank really soon. It's close, but I think I'll probably end up. So yeah, trying to think if there's anything else. Oh, net worth. Yeah, that's understandable. To start a portfolio with. Wow. Man, that's really dependent. I mean, are you going for capital gains, or are you going for dividend investment? I think that's really important to know both. And then for those of you guys, before you really start leaving, make sure if you haven't already, hit the like button and also subscribe. It really means a lot. It lets the algorithm know that I'm doing a good job, and also lets you guys know anytime there's a new live stream if you guys really got benefit out of this, and also anytime I post a new video. So please do that. Discussing further becoming an accredited investor. So I'll do the 5 stocks, and then I'll do the accredited investor, and then might head out. But the 5 stocks I would choose, personally, I think a really good one right now is BHP. I really enjoy BHP. I think Johnson & Johnson would be a good one for a long term. What other stocks have we really been looking at recently as well? I think Visa's got a long term to run, but I think it's relatively expensive at the moment, so I don't necessarily would choose that. Let's see what else there is. Let's choose some stocks that that would be off their 52 weeks high if I would be there. So a lot of companies off their 52 week highs. Let's see, 84%. That's Chesapeake. I wouldn't invest in that right now. Icon Enterprises, wouldn't invest in that either. 3M is still 24% off their 52 week high, 11% off their 52 week low. That's not a bad place to buy, but it's not the best at 167. I don't know if I would buy that, but I mean, if you don't have a position. Altria Group is off by, it's up 25% from its lows, which is pretty crazy. If you don't have Altria Group, I think for long term, I think it's a good buy. You might be coming a little bit late to the party, but at the same time, if you don't have it in the portfolio, it's definitely a good staple to have in the portfolio. Phillips 66 is not a good buy right now. It's up 50% from its lows of $78 at the moment. Pepsi's up 28% from its lows. Yeah, man, everything kind of went full swing. I don't really have a lot of good bargains in the portfolio at the moment. There were some good ones in industrials, but yeah, it kind of dropped out. Cyrus One might be a good one if you're into. It's kind of in the middle of its 52-week low and its 52-week high. But if you're into data storage real estate investment trusts, so cloud investing and stuff like that, that one's not too bad off of its 52-week high. South 32. What else is there? Yeah, 3M again. Altria Group again. Exxon's still 17% off of its 52-week high, only 7% off its 52-week low at $69. I would buy some Exxon if you don't have it in the portfolio at the moment. I think Exxon is going to go through a really good expansion over the coming years, because once they start getting on some of this this cheap oil from Guyana, it's really going to start increasing their return on capital invested, because they've been investing a decent chunk into Guyana over the past couple years now. Now that they're going to start getting cash flow coming from that, it'll at least turn cash flow neutral rather than cash flow negative, and at least offset some of that. And they got some really cheap oil in the Permian as well, so really good choice for them. Let me hide this and see if there's any other nuggets in the portfolio at the moment. So based off of what I'm invested in, there's not too many nuggets at the moment. So yeah, I mean, I think in the oil industry at the moment, if you were to go to any of the majors, Exxon is probably the best. BHP is a good one in the portfolio if you want to get a materials company. I don't know who the best finance company or best bank company would be at the moment. So that's something to ask yourself as well. Ooh, we got a lot of people chiming in, chirping in. I got to catch back up. Uh, so hidden freedom investing is kind of giving an idea. So yeah, so I don't know if that was 5 or 6 or no, who knows, but yeah, it really all depends. Also, though, I mean, if you're really trying to get an increase and you don't necessarily care about capital gains and you're trying to minimize your exposure to the tax aspect of things, because I know you're getting that 30% tax hit because you're investing from Kuwait, maybe the S&P 500 is the way to go for you, and you just continue to invest month after month, especially because you're going to be doing about $2,000 US a month. Maybe just continuing to invest in, say, the S&P 500 or total stock market fund, like VTI or ITOT, iShares, whatever has a really low expense ratio, and just keep that going. But yeah, I agree with hidden freedom investing. I mean, getting an income of 200K for 2 years is easier to do than probably the net worth. Because yeah, I think that's something that you're proving rather simply, rather than saying you have $100 or $1 million in assets that could be spread across multiple accounts and then verifying those accounts and what have you. So the one's easy, goes to the government. So I feel like that one's probably easy to verify than the total net worth aspect of things. But yeah, I agree. Not many deals right now. IBM and Cisco, not your favorite, but those are good. Coca-Cola low. Don't know about that. I don't necessarily know how much they're looking at. I'd have to look at them. But last time I checked, they were trading around 22 when they were priced in the low 40s. So now that they've run up to the low 50s, might not be the best price at the moment. But yeah, passive income investor chirping in with GEO Group is cheap if you can risk the government aspect of things. But we'll see. Yeah, hidden freedom investing is chirping in with the aspect that the Coca-Cola is currently a PE of 30. Hidden freedom investing, do you know what the price to free cash flow for Coca-Cola is at the moment? Duke Energy, yeah, they have the long-term LNG play associated with things. So yeah, SP 500 individual stocks is more fun. I would agree with you. UBS, do you mean UBS is Bank of Scotland as a good finance company to look at, Ryan? Great dividend, I agree. And I think that IBM is doing a good job transitioning themselves to a cloud company, whereas before they were very much heavily reliant on services. They are, that's scary. Sorry. I'll have to look at that and wonder what hit their free cash flow this past year that would make it go up to 75. That's pretty crazy. But yeah, IBM is doing a good job. I'm invested in IBM. I think I got 5 shares or so. I haven't been steadily investing in IBM over the past couple of years. It was one of the things I bought in 2014, 2015. So I think now I'm just kind of breaking even because I did buy at a little bit higher of a price. So my average cost base is $158. And at the moment, it's only worth $134. So my gain is even, basically at 0.5%. So I've only made $3 or so. But my yield on cost is 4.1%, making $35 a year. I don't really plan on buying, but it is what it is. Lots of patents. It does have a lot of patents. And luckily, it's not like Kodak, but I do wish they might have transitioned to cloud a little bit sooner. But yeah, Uncle Warren made a decent loss off of that bad boy as well. Yeah. Yeah, they have a lot of patents, man. They got a lot of power, and they have a lot of income coming in from a lot of places. I'm curious. I think they closed the Red Hat deal, so I'm curious how that ends up going. But I think I'm going to cut it off here unless there's one or two more questions that kind of chirp up within the next Blue Hat, yeah, because Big Blue and Red Hat. But yeah, I think I'm gonna call it quits here. Really hope. So if you have questions on GM, Ford, or Tesla, I would ask my buddy Passive Income Investor. But yeah, I think I'm going to cut it here, get some laundry in the machine, so that way I can start packing up. I got some treats I need to bring back to the family, some hot sauce, some pepper sauce, and really appreciate it. We almost hit 3 hours. I would keep going if I didn't have to get things ready for a 9 a.m. flight tomorrow. So I really appreciate it. Hopefully I'll upload another video for you guys on Monday. I think what it is trying to remember exactly what it is. I forget. I'm talking so much and so excited about this live chat that I completely forgot. So really appreciate you guys stopping by. If you guys have any questions, hit me up on Instagram, and always look at the comments section. I always read. I answer about 95% of the comments. So really appreciate you guys stopping by. I'll talk to you guys soon. Really great chat, and I think that's been the best one yet. So hopefully I'll see you guys on another video. Cheers.